So let us start. Good morning, everyone. It is good to see you. It's always good to see the colleagues face to face. And after 2 years, 2 years have been eaten up by COVID, it's also an honor, pleasure, and everything to meet people face to face personally. I mean, Sa-Dhan was doing a lot of things virtually, but when you meet people, it gives a different kind of vibes altogether. So, welcome you. And as you know that microfinance, the work of microfinance has already we have crossed 25 years, and it's a honor for all of us. It's a pride for all of us that we could cater so many people, develop their life. Uh, in our national conference, we will be presenting a study of impact of microfinance, where we are seeing that around 30% of the population have been out of microfinance domain. They think that they have outgrown microfinance, and they have outgrown microfinance, and they want larger loan and they want larger support. It's also another pride for us. So having that thing in our mind, we also need to be looking at that what we couldn't do as well. We need to do a lot of stuffs which possibly we would learn today altogether. Karnataka has always been a very important segment for us, for microfinance and also for Sa-Dhan. Many of the promoters of Sa-Dhan, many of the stalwarts of the microfinance are from this state and basically from this city as well. That's another thing which we should appreciate. There are a couple of states which have been really doing well. Karnataka is one of that. Thank you very much. And keeping that thing in context, I won't take much time. I would like to welcome Mr. Gigi Maman, CEO and ED of Sa-Dhan, for his welcome and introductory address. Mr. Maman, over to you. There is one logistic thing that, all the proceedings will be documented, and try to speak in this mouthpiece or something which will be helping us to document everything. Thank you.
Thank you, Sabil, and good morning to all of you. First of all, let me welcome all of you for this today's conclave on financial inclusion in Karnataka state. I should start by thanking NABAARD for supporting this conclave. In fact, Sa-Dhan had been organizing such kind of conclaves in other parts of the country also. We had a couple of conclaves done earlier. So here in Karnataka, when we discussed with the CGM, he was very happy to support this program. Basically, this conclave is not only focused on microfinance. It's on financial inclusion. So financial inclusion, as you know, it's a wider term. It covers a whole lot of activities. In fact, financial inclusion is providing financial services to the poor people. And what are these financial services? It is deposit, or providing space for keeping the deposit or savings, giving credit, and other kind of financial services like pension or payment system, remittance, all kind of financial activities. So financial inclusion doesn't stop only by providing a facility for keeping the savings or opening of SB accounts or opening of bank accounts, but also it extends to other activities like getting credit, right kind of credit, and other financial services. As I said, it could be payment system, it could be remittance facility, it could be pension, it could be insurance, all kind of things. So we would be discussing more of these things in this conclave. Of course, being from Sa-Dhan and AKMI, who have joined hand together with NABAARD to organize this, probably some focus would be there on microfinance in these discussions. but I'm sure our participants are from the banking sector and NABAARD and Reserve Bank and also SIDBI. So they would be able to give us a wider view, and especially a person like Professor Sriram, he would be able to take us to a wider perspective of financial inclusion in our discussions. See, financial inclusion is something which we had been hearing for the last several years. In fact, if you ask me, the first step of financial inclusion started in early 1900s when Cooperative Societies Act was promulgated by then the British government. Basically, what does that mean? It is only to provide affordable cost credit to the people or to the financial service to the people. So when there was no facility to get finance for the farmers, that is a time when the Cooperative Societies Act was promulgated in early 1900s. In 1907 or 1908, I think Sriramji would be able to give us a better perspective on that. Subsequent to that, if you see, after the independence, there was a lot of actions were there. Like first, if you say, the nationalization of the Imperial Bank of India, forming, and several other banks, forming State Bank of India and its subsidiaries. Subsequent to that, we had a nationalization of 14 banks in 1969. Then we had the RRB Act in 1975, which brought out the regional rural banks, and we had around 196 banks at a point of time. Probably it just come down to maybe around 35 or 36 at the moment because of the mergers. Then again there was a nationalization. So all these were, then there was a lead bank scheme, district credit planning. All these were basically aimed at providing the financial services or the credit to the poor people, to the lower segment of this society. But the real sense of financial inclusion, bringing the unbanked people to the banking fold, as a program started, I would say it started in 90s when SHG Bank Linkage Program started. SHG Bank Linkage Program was nothing but bringing the poor people who are out of the banking fold to the banking system through a group mechanism. Of course, there was no individual bank accounts were not envisaged in that. It was through a group they were brought into the banking fold. Then, of course, in 2005, 2006, Reserve Bank started talking about, or in their monetary policy, they started discussing about the financial inclusion as a program. And then onwards, we can see a series of actions happened. RBI had taken several steps to bring financial delivery mechanism to the people's doorstep by opening more branches, having more outlets of various financial service units. Even yesterday's, if you see the DBU, it's nothing but a further step to the financial inclusion which is happening. Of course, then Government of India started this Swaviman program in 2010 or 11. Then subsequently the PMJDY came. Of course, the real push came, I would say, it's a PMJDY. You know, at the moment we have 42 crore accounts opened under Pradhan Mantri Jan Dhan Yojana, and around 1.5 lakh crores of deposits or the savings have been mobilized through these 42 crore or 43 crore bank accounts. So what I was trying to say is that there has been a series of steps, and the latest I would say the yesterday's DBU, or which is where the digital banking units have been opened at the remote areas, at the far-flung areas, so that the people would be in a position to get the banking services. So there had been a series of steps which has been taken for bringing banking to the people's doorstep, and also making available to that. Here, the role of microfinance institution is very, very important. In fact, microfinance institution they started functioning, as Sabal said, somewhere in 97, 98, the first microfinance institution started. Since then, we have several microfinance institutions started in various point of time. And at the moment, we may have around 250 to 300 microfinance institutions. With Sa-Dhan itself, when I'm taking the big and the smaller ones, very, very small ones also, which are not in the fold of either Sa-Dhan or even MFIN. We have at Sa-Dhan, we have around 150 microfinance institutions who are doing the lending activities. MFIN has about 56 NBFC MFIs doing the lending activity under the microfinance. Of course, there are some common members are there. Apart from that, we have banking institutions like small finance banks, we have universal banks, you have cooperative banks, all kind of institutions are there. So India is not short of any kind of financial institutions, but only the reach, how to reach them. So microfinance institution, I would say, did a very, very major, did play a major role as far as providing credit is concerned. Because as I said, opening of account is one part of the financial inclusion, and providing credit and other financial services also an equivalent part of it. And getting credit at the right time is very, very important. So microfinance institutions, they started providing credit, non-collateral credit in smaller quantum to the needy people, to the poor people from 96, 97 onwards, and now it has become a major movement, as I would say. Today there is a total portfolio of around 3 lakh crores by the microfinance institutions, almost 3 lakh crores. It has 2.75 lakh crores as at the end of the Q1 of the current financial year. I'm sure it must have touched around 3 lakh crores at the moment. And our experience had been that these portfolios had been doing very well. Always, except for some some incidents or events which are beyond the control of the people, always the loanees who avail the facility of microfinance have been very responsive as far as the repayment is concerned. That's why the microfinance institution always boasted a near 100% recoveries. But of course, we had incidents like we had a crisis in Andhra Pradesh in 2010, 2011. We had a subsequent to that demonetization, which was affected the liquidity in the system and the liquidity in the society, which caused a problem for the microfinance institution. There was pandemic subsequently. All these were, apart from that, there were regional, localized problems were there. But in spite of all these things, the microfinance institutions have been surviving, thriving well. They were able to come out of all these issues very well. It's basically because of the support of the people. So what I am trying to say is that if you really trust the people, if you really provide the credit to the people, and at the right time, at the right quantum, they would be able to repay, keep your trust and repay the loans on time, and they would be able to, both will have a win-win situation, in lending institution as well as the people who avail the facility. So let's take this forward. As Saibal said, Karnataka is one of the major states where the microfinance institutions have been doing well, and where the microfinance as a program has been thriving well. If you ask me, the SHG bank linkage program, the very root of it is in Karnataka, in Mairada, in near Mysore area. In 1986-87, NABAARD started an action research program with the Mairada NGO, from where only the SHG bank linkage concept has come up. And subsequent to that, even MFIs, if you see, it's basically nothing but an adoption of SHG program as well as the Grameen program of the Bangladesh. So I would say it's a birthplace of microfinance, I would say, the Karnataka. And ideally and very, satisfactorily they have been doing so far. Today we have a total portfolio of nearly 18,000 crores. Around 18,000 crores as far as microcredit is concerned, of which more than 50% is by the microfinance institutions, and around 40% is by the banking institutions. Overall, if you see in the all India perspective, if you see the microcredit has got different players, as you know. Microfinance institution is having a share of around 35%. Banks have around 40%, plus SFBs are another 15-16%. So together they have around 55 to 56% share. And then the balance by some other institution like NBFCs and all. Whereas in Karnataka, I find that the data I was just seeing, it's basically the microfinance institution has a larger share in the total credit. Out of 18,000 crore, more than 50% is by the microfinance institution. Banks have around 40% and the remaining by the other institutions. So this is one state which has been doing well, and even the recovery looks quite decent. We have a PAR level of nearly, around 1.2, 1.3% only as a whole, the state as a whole. So it's really doing well. I know that during the pandemic period, most of the institutions have suffered, including the NAFINs, where I was an MD during that period. We had difficulties, and I'm sure most of the microfinance institutions and banking institutions and any lending institution had some problems. But then we were able to come out of that, and now we are in a position where things are much more better and normal. And today we are able to sit without even having a mask. Otherwise, we just think about last 2 years, how the life had been. So things are improving. And as a state, as a microfinance sector, Karnataka has been definitely an important sector for state for all of us. And I'm sure this is going to grow and make it much more better. But this doesn't mean that we need to stop it here. We need to take it further. Definitely, the next steps would be further expansion. Credit intensification is a next step we need to take forward. Micro enterprise is another area which we need to focus on. Yes, I know MFIs mostly give loans to their for productive purposes, but can the enterprises can be scaled up? Can it be made much more I would say fine-tuned to have better products, better markets? So maybe the next step is to encourage the micro enterprises, the enterprises in the state, and make the people earn much better income, and make it their life much more comfortable and much more better. So we need to go forward from here. As I said, we did well. We need to further go beyond what we have been doing. We need to ensure that better enterprises are created, and better products are developed, and better markets are developed, so that it will be useful and it will be beneficial to everyone. So I'm sure today's deliberations will be taking us or showing us some direction towards these aspects. And if as we planned, we have got 3 panel discussions here. We have got unfortunately, although we planned it well in advance, unfortunately a couple of people whom we were to have here are absent today because of their exigencies, like the CGM NABAARD, Mr. Ramesh. Unfortunately, yesterday he had been asked to go for a meeting in government. Some urgent meeting is there, so he is not there. Of course, Mahesh is there, the general manager from NABAARD is here with us. RBI, the general manager who was to come, Madam Sunanda Batra, she had some health issues, so she has also opted out. Government secretary level, somebody was to come here. They had confirmed it, but unfortunately there is a meeting called by the chief minister. So some coincidence of certain things have happened. So because of that, we are missing some of the people. But still, I'm happy to see many senior people are here with us. And I'm sure today's deliberation will be taking us forward and showing us a way for the Karnataka. How do we go further towards the financial inclusion? How to strengthen the financial inclusion program? How to make it more broader? How to make it much more wider? So with this, I welcome each one of you for this financial inclusion conclave. I once again thank NABAARD for supporting this program. I thank AKMI for taking all the efforts to organize this. Of course, they are part of the organizing team. Of course, my team from Sa-Dhan is also there. I really thank Saibal and Karthik for all the efforts they have taken to organize it and make it happen. So with this, I welcome each one of you, and I wish the conclave will come out with some specific and very pertinent recommendations and suggestions which will be useful for the state to take it forward. Thank you so much. Thank you. Have a good day. Thank you.
Thank you, Mr. Momin. It's always good to hear you. Now, our next session and the inaugural session is Reflections and Perspectives. As Mr. Momin was telling that this event is not only for microfinance, it is for the larger perspective, it is for larger financial inclusion of the state. At the end of the day, we would be looking forward for a way forward for the state. How can we make it more efficient, more effective to take the microfinance and financial inclusion to the last person? So in that context, this is very important to understand the perspective of reflection and perspectives of the different types of agencies. We are honored to get Professor M.S. Sriram. He is from Center of Public Policy, IIM Bangalore. I mean, it's that I am introducing him for that reason. People will know it. It's not he is so much renowned and he is so much famous in the segment. We are honored to get him as a moderator. Mr. Sriram, please come, Professor Sriram. We have got Mr. P. Biswas from RBI. He is AGM from RBI. Mr. Biswas, please do come. Okay. So we got Mr. Devananda Sahu, CGM Canara Bank. Mr. Sahu, please on the. We have got Dr. K.S. Mahesh, GM NABAARD. Mr. Mahesh, please on the. And of course, we got our dear friend, Mr. Sudhir Madhavan, Head of Microbanking, Jana SFB. Over to you, Professor.
Good morning. I'm very happy to be here. After a long time, I've come for a financial inclusion event as well as a Sa-Dhan event, both. So it's good to be amongst friends. And every time there's a microfinance, financial inclusion related event, it looks like an alumni association gathering. You know, it's a set of people with whom we all are aware and friends. And this is one sector where even competitors work very closely with each other. So that's something which is very nice. I mean, nobody is distrustful of the competitor. Everybody is willing to show their own methodology and multiply the good work. So it's great to be here. When Saibal started off the proceedings, I mean, I felt like a student. He was like a teacher. He said, please give a entire brief on how we are going to conduct the session, what are you going to ask, give a brief for the panel and so on. So I did that. But unfortunately, like every student who does a good assignment, the grades don't come. So the people to whom I sent this mail, most of them are not here. You know, Ajay was supposed to be here. I hope you've got the brief that I had given to Ajay. Sidbi is not here at all. I mean, I know. I mean, I don't think that's what, as Gigi said, it's a coincidence of multiple things that happened. But my own record with Sa-Dhan has not been very good. So I was also feeling a little nervous saying that will I make it or not. And Saibal also called me a day before and said, are you really coming? I said, finally, yeah, of course I'm coming. Anyway, that's on the lighter note. We will, I think, even though we have started late, I think because there is lunch, I think we need to end on time. So we need to manage time a little bit. I won't take too much of time. What I'd do is I'll go according to the broad indication that I'd given. Let's start with Jana, with Sudhir. I mean, basically, what we'd like you to look at is how do you look at the small finance bank portfolio growing, because you've moved from being a microfinance institution to a bank, which means now you manage both sides of the balance sheet. So that's one big thing with all your presence. You know, how is it that's panning out? And second is, how is your experience in Karnataka completely different from, or is it different from the rest of the country? These are two things. Yeah.
Good morning to all of you. Good morning to all the panelists. Yes, it's been a wonderful journey for last 4 years when we moved from an NBFC offering microcredit to a SFP-like bank. That was the first time we were actually able to offer both sides of the asset as well as liability to the customer, as well as for the first time we knew what the customer needs. Microcredit is only one of the facets for financial inclusion. It's not end of it. But the problem when we talk of microfinance, we only talk of microcredit. In general, last 4 years, what happened is we found there are 3 kind of phases for across a customer goes. First is the borrower actually takes a microcredit. 90% of them put it for some kind of a productive use, start getting some kind of income. That goes on for 2 or 3 years, 2 or 3 cycles. Then the confidence actually starts built up. And when they build up their confidence level, when they're assured of their future income streams, they start asking for higher loan amounts. And that's when we said, as a bank, which we were able to offer. We started launch 2-wheelers for them. We launched micro housing for them, micro lab for them. So a lot of these customers, after 2 or 3 cycles, their incomes were much more higher, they needed higher loan amount, their confidence was up. Simultaneously, they wanted an upliftment of their status of living. And that's what I think we wanted to be aligned with that at this point of time. So we launched 2-wheeler. Very surprisingly, almost 30% of the 2-wheeler loans, what we do is through microfinance customers. And almost 70% of them are first-time borrowers. They come and ask my people saying that which vehicle to buy, which storefront to go, and we guide them across board. They're very scared to go for a 5 lakh loan or a 6 lakh loan to normal banks. While we know their history, we know them, we have a face-to-face connect. So it was easy for me to get into that segment fast. Almost all the loans which is less than 5 lakhs is what we do is through microfinance customers. At the same time, it's a very wrong notion that people have that microfinance customers don't save. When this segment reaches the second level of comfort or confidence, they even start saving. And that's why it actually helped us to build a 200-300 crore balance sheet on the savings account. Because savings helps them to understand what the future is, take care of the future, gives control of their own life. And that, I think, is when they start saving, not only the one side of the product and the other side of liability, they start doing. And that's what I think the complete financial inclusion comes into play. Because they are in control of their life, they're assured of their future way. So that's how we started building the life journey of this customer. So in nutshell, microfinance customers has to be handled for the first 2 cycles, then built across, get to the needs of the higher level of loan amounts. Parallelly, you start offering them savings account and everything, and that becomes a complete financial inclusion space across. And that's what we in Jana tries to do across. Coming to Karnataka. Karnataka experience has been actually much better than a lot of other states because it's among the top 4 industrialized states in this thing. So the knowledge level of banking was far better than other locations. Okay, there was a recent article which says digital implementation in microfinance, Bihar is better than Karnataka. But I think the financial literacy point of view is, I think, much better in Karnataka. One is there was a deeper penetration of microfinance companies, which has almost gone into each and every village. So you have almost 100 microfinance companies still operating in Karnataka. So it's everybody there at every place. So I think the penetration is there, the education of the customers are still there. Okay, there were bumps like Demon and COVID, which actually changed the path and changed the directions. There's some unique challenges which I think, which as a microfinance company and small finance bank will start facing is, there's a very high-touch model and very human-intensive operating model. You will have a lot of attrition coming up involved because of the high degree of economic activity when it starts going on. So how do you build a pipeline of people? How do you build a training programs, how do you make sure that the customer connect always consistently remains is going to be a big challenge for us. Second is delivery of microcredit. The full model was based on a group getting formed. Post-COVID, the group concept is breaking it down. So what would happen is your operating cost will go on increasing. So how do you use technology to make sure that you get the operating cost down is going to be the next big challenge, because you can't increase the rates now. They're going 100 and 150 players. The rates is going to come down. And when the operating cost goes up, how do you use technology to make sure that operating cost builds it across board? Otherwise, you will be out of this market after some time. But Karnataka is a very sweet spot, similar to what I look at Gujarat or Maharashtra or TN, because being in a highly industrialized area, highly industrialized this thing, the ticket sizes can be much more because the income generating activity is much more higher. And they can actually put a lot of this money into productive use instead of a consumption use. So I think Karnataka is in a very good spot. And I think that's the right time for us to have this kind of enclave so that we can actually tap it and see how do we build it across board. Thank you.
Thank you very much. That was not only precise to the point, but also you kept your time. Thanks a lot. I'll move to Mr. Sahu next. The question we have, you ultimately are state-owned partly, even though you're listed and you're partly owned by public at large. The question is, because of the nature of being a public sector, you always have pressures which is beyond your bottom line, which is SLBC commitments, coordinating between other banks, making promises and delivering on things that are not essentially of your management, but from the outside ecosystem, which is either the state or the political ecosystem. So in that sense, how have you been managing? Because this is a portfolio where there is a lot of public interest as well. And sometimes the public interest trumps the profitability and viability issues. So how have you been managing this thing? And is Karnataka any different from the rest of the states?
Thank you, Professor Saab. At the outset, on behalf of Canara Bank team, I thank Sa-Dhan and all the stakeholders present here for inviting us to take some inputs for our day-to-day consumptions. Basically, I am not the experts like all the MFI people or NBFC people or the experts from Sa-Dhan and including our Professor Saab. I am not a public speaker also. I am basically an operational man. My experience as regards to this financial inclusion, because I am the only general manager CGM in Canara Bank who has headed 5 circles. This is 5 circles in continuations, starting from West Bengal, Jharkhand, Bihar, UP, and now Karnataka. Sir, as you told that how we are managing, because this is the priority. Actually, before that, I want to give one or two examples that we all think that our financial inclusion is saturated. 7 days back or 10 days back, there was a call from, as rightly told by, there will be instruction from the political circle. There was an instruction from one of the top leader from the capital that these are the villages which you have to visit, you have to survey door to door, and I want to see within 10 days that how many KCC animal husbandry, KCC allied activities, KCC fishery, and including social security schemes you are able to do. We are thinking that Kolar belt is a very NPA belt, no repayment. All are covered during the regime of 2009 to 14. But to our surprise, sir, yesterday I got the summations that in 7 days, all my team members camped there. They made door-to-door campaign, household campaigns, and at the end, we got about 400 KCC animal husbandry proposals. We took the applications on the spot. We completed all the formalities, and now we are in the process of disbursement. Similarly, equal number of SB account opening forms, which we told that all have their PMJDY account. It is not like that, sir. Still many are far from the reality. Many family members are still not having SBI accounts. So equal number of SBI accounts with all KYC compliance, and also social security schemes including APY, PMJJBY and PMSBY. So sir, that what we are telling that in national as a whole, a lot of opportunities there, and more so I was just telling to Professor sir that during 2017 to 20 I was in Bihar, where Jivika is more prominent. We think that Karnataka is far advanced as aspect of financial inclusion activities is concerned, but to my surprise here, I feel that we are far below what Bihar or Jharkhand is going ahead in respect of both SSG lending or JLG lending, and also the lending under MFI. Because most of the participants are here, we have long association as both under SSG lending, including IDF. We are a close association with the IDF in respect of Tumkur areas and other parts. Recently also we have started a co-lending with the IIFL, and also in many pockets of the state and also in the country also. Definitely sir, there is a lot of opportunities, and to our because we are the SLVC convener in Karnataka Bank, sir. I am not telling about the bank as a whole, because bank is doing well under, because our priority is always, sir, RAM always, though we do more on corporate credit also, but our focus, our pressure is only on retail, agriculture and MSME, and it will be continuing our efforts. But coming to the Karnataka state, because as we are the major stakeholders, we have 1,674 branches and almost equal number of banking correspondent, and I think last we have to add another 10,000 banking correspondent within December. This is the instruction of my corporate office top management. So we are going a very long way in very aggressively going to defend our financial inclusion drive, and our portfolio under SSG for Karnataka, we have almost 31,000 active groups are there. Our exposure is 1,276 crores as regards to the SSG. Also JLG, also because of the MOUs signed recently with NABAARD, we are promoting JLG in very in almost all the district of the state. Coming to the SSG again, sir, again as the SLVC convener, and the government of Karnataka has assigned us the anchor role to coordinate with all the, we have been, MOU has been signed in the July month. There they have given us the SOP involve all the public sector bank, RRBs and other scheduled commercial banks to take this in a mission mode, and a set of SOPs has been formed. Then timeline is also given, because this is some 500 crores allocation is made from the government of Karnataka for these activities. So we are going very aggressively, but one lacuna is still there for public sector bank. I cannot because they are far ahead of in respect of digitalization of our lending practices. There we are actually still, even our bank, though we have started digitalization in respect of retail and MSME, still in respect of agriculture and this SSG, JLG activities is yet to start. RFP has been floated. I think within a month or two it will start. We will be going, because that is the only loopholes on our part. So as the anchor bank, I must take this opportunity and forum that I must appeal to, because we are the anchor bank, lot of responsibilities given to us. No public sector bank is here, but many stakeholders, because all are the stakeholders for making this project a success. I appeal to all of you to support extensively to make the financial inclusion activities in the state a great success. Sir, finally, I just last week I was in Amsterdam with my managing director, MD, and a team of other public sector bank, including IB officials. There were participants from 180 countries, and in the plenary session of the Cybus SWIFT, the SWIFT CEO started with his session only on microfinance, and digitalization of credit practices. And in that about 500 stall, I find that about 15 to 20 stalls were from MFI and credit linkages and digitalization of credit in that stall in Amsterdam. So when world is seeing on that aspect on micro lending, microfinance and financial inclusion, then because we are a developing country, when developed countries are also looking for that, we must also, sir, I think these stakeholders will help us to, and this kind of awareness actually in respect of public sector bank, what we feel that awareness and the focus is lacking. If we give a more focus, that when we know that the repayment is 99.9% in SHG, JLG, and where the agriculture or direct lending recovery percent NPA is around 20% to 26% in respect of MSME, then I think all banks will or all PSB will definitely be happy to lend more to this sector. Sir, thank you very much for giving me. Of course, I will not be justifying your questions because not much exposure to that front, but as an operational man, this is what I learned during my experience across the states. This is the thrust area and empowerment of the, especially the women empowerment is the most, I think, the key point here. And Karnataka is also growing ahead, as already our CEO sir has told that it is the focus of thrust area of the government of Karnataka also. Thank you very much.
Thank you. Thanks a lot, Mr. Sahu. Most of the people in this room must be borrowers from Canara Bank, so it is good to see somebody who's sitting inside the chamber to come out and speak and be so open and encouraging. So I'm sure together there is much more work to be done. Thanks a lot for your remarks. I'll move to Mr. Mahesh. I mean, there's obviously going to be a session on SHGs and FPOs in the afternoon. What I had indicated to Ramesh, and I hope he shared with you, was broadly to, since the government is not very well represented, it should have been represented in the morning, the inaugural session. What's happening vis-a-vis NRLM and SRLM and SHGs related to that. I mean, I'm sure thanks to NABAARD as a nodal agency, there's a lot of coordination between independent SHGs, NGO-led, as well as NRLM. And also there's this digitization program that was going on. So if you can give a flavor of what's happening in this sector, that would be useful.
Thank you, sir. Thank you, Professor Sriramji and other panelists. See, as Gigi sir pointed out, we are sitting in the hot seat where the MFI movement started in Karnataka, like in Mairada and HD Kote around Mysore. So today, if you look at the small spark which started somewhere in 87 with the Action Research Project and which culminated into a pilot project in 1992. 30 years, today we are in 30 years of SHG bank linkage program. And the size of it we look at from 500 SHGs planned in 92, which ultimately turned out to be 620 in 94. Today we are talking about something on 1.19 lakh crore SHGs in the country. Phenomenal growth. And at the same time, this happened in 92 and subsequently in 2005, NABAARD also started this concept of JLGs, Joint Liability Groups, because when we look at microfinance, like what Mr. Sudhir told, we don't look at microcredit per se, it's microfinance. So all aspects of finance, including all other financial facilities. So JLG is also one mode of funding which has been happening during this last 17 years of existence. If you look at JLGs, again we started as a very small project in eight states. Today we have close to 1.88 lakh crore SHGs. So cumulatively, if put some, there will be a lot of overlapping because some of the SHGs would have JLGs as part of them also. But cumulatively, look at something around 3 crore of groups, be it SHGs or JLGs, in the canvas of Indian rural economy, basically, who are helping livelihoods, getting credit from banks and other institutions, and they're able to prosper. If you look at the credit flow to this sector, like as I said, the SHG bank linkage program, which was pioneered in that pilot project in 92, we have come to something like 1.51 lakh crore. That's the commercial, that's the banking lending which is going into the SHGs. I'm not talking about the MFIs. This is only the banks who have lent to SHGs in the as on 31st March 22, outstanding figure. If you add the MFI figure, as on 31st March, it is 2.62 lakh crore. GG sir said it's 2.75 in Q1 and likely to be touching 3 lakh crore by this quarter, by the September quarter. So we have almost close to 4.5 lakh crore flowing into these SHGs. So the quantum is something unimaginable what we thought of 30 years back. If you look at Karnataka per se, even the JLG funding we add further, it's about 3.25 lakh crore. So it's cumulatively something like 8 lakh crore has gone into both SHG and JLG funding. Karnataka situation is also a very, very rosy picture. In terms of SHGs, we have close to 16,000 crores funding happening in Karnataka. We have about 8.03 lakh SHGs in Karnataka, out of which about 6.5 lakh SHGs are credit linked. And they have availed something around 16,000 crores, 16,500 crores from the banking sector. What I'm talking is again banking sector. On the JLG part, again, we have about close to 25,000 crore outstanding in Karnataka. We have about 15.5 lakh JLGs who have been credit linked. So that's the numbers you talk about in terms of SHG bank linkage program. On the MFI front, again, if you look at the almost 225 microfinance institutions operating in the country, 75 of them are operating in Karnataka, almost 1/3 of it. So there again, if you look at their lending, phenomenal growth in Karnataka, and the one good point about Karnataka is the NPAs are not more than 3%. See, normally when SHG bank linkage program started, the first and foremost point we are talking about is the recovery. We near 100% recovery is what we were talking over the period, like what Malegam, that Andhra crisis and all those happened. A lot of delinquencies were there. Subsequently, we have RBI came with a regulatory framework for MFIs, and today in 22 we have again another regulatory framework for MFIs. Today, with all those things, Karnataka has a very good, very healthy portfolio of about little over 3%, 3.03%. So coming to NRLM, no. See, if you take the entire 36 years of from 87 action project of MYRADA, today we are in the 36th year. If you can split it into 3 phases of 12 years each, I would say the first 12 years was basically the pilot project and RBI recognizing this as a priority sector from 87 to 99. And 99 was the formation of SGSY, the government movement on SHGs. So the next 12 years, the SGSY movement, and government gave a 1 million target for SHG bank linkage program, which was achieved well before 10 years time. It was achieved in 7 years time. Then by the end of that 12 year, JLG thing also came during that period. Financial Inclusion Fund was set up by NABAARD, Financial Inclusion Technology Fund, to what we are talking today on the Financial Inclusion Conclave. It's not only the credit part, it's also including people, inclusiveness, inclusive growth, all those things. By the end of another 12 years, we had SGSY restructured into NRLM in 2011. Then the Malegam recommendations, regulatory framework in 2012. So now onwards is the growth phase of MFIs. So on one hand, the SHG BLP program got strengthened further, and then SHG, the funding through the MFIs also improved a lot. Now, NRLM in Karnataka, if you look at, they have got 2.36 lakh groups registered under NRLM in Karnataka. NRLM was harping on the Panchasutras, which we started when the SHG bank linkage program started, on regular meeting, regular savings, internal lending, proper repayment, and also the books of accounts to be maintained properly. So the fundamental, the pillars are still the same. NRLM has a well-knit setup to do it, all those things, including developing them into micro enterprises. Today, when we talk about Karnataka, as I said, 2.36 lakh SHGs are registered with NRLM here, and they are in the process of making them into micro enterprises, into FPOs. Like last year, they have done some 4 FPOs out of these groups, and this year they are targeted something around 31 FPOs to be set up in Karnataka. And over the period of time, if you look at SHG BLP, which was done by the banking sector and which became MFI segment subsequently, today if you look at the interconnectedness, almost 50% of the borrowing which the NBFC MFIs do is from the commercial banks, from the banking segment. So there's a lot of interconnectedness. So SHG BLP is parallelly going on. We also have WSHG here in Karnataka, in 2 of the districts, Chitradurga and Gulbarga. where still that anchor NGO model is still functioning. So in addition to what is happening in the banking sector, lending and MFI sector, we also have a interconnectedness in the form of banks funding the MFI segment. Almost 50% of borrowings from banks. So if you look at the overall picture in Karnataka or for the country as a whole, there is a lot of synergy. Individually they are functioning, and there's a lot of synergy between the banks and the MFI institutions today. So I think now it's a time to consolidate, and from mere promotion, nurturing of SHGs, we have to move to a level of sustainability of these SHGs in the form of micro enterprises, and maybe down the lane companies, FPOs. The opportunities are unlimited. I stop here. Thank you.
Thank you very much. I had not realized the 12-12-12 story. I mean, this was a new insight. Usually we go through cycles, and this is a very interesting insight that you provided. May I request Mr. Biswas to talk about financial inclusion, as to how he looks at the developmental function of RBI, and because RBI is much more of a regulator and conscience keeper and this thing. So, how do you look at Karnataka as a state being in the FIDD?
Thank you, Professor Sairam. Good morning to you all. Okay, I am not a good speaker, and for the financial inclusion department, I'm from the department only. But as my GM is having some health issues, so I came. So in Karnataka, what we observe, because we are going to the interior of the villages to conduct programs and all. So what we observe that there is still lack of awareness about the financial products and all. Okay, many that is the villagers do not have this social security schemes and all. So we're really surprising after so many years of financial inclusions and all, that still it is not happening. Though in the cities and that is the semi-urban area, it is okay. But if you go to the rural areas, now we are actually penetrating to the rural areas. Every now and then we are going to the rural areas, conducting camps, talking to SHGs, farmers, and what are the problems they are facing, why they are not coming to the banking sector. Instead, they are going to the money lenders. So one of the camps, the people are telling that there are many paperworks involved in the banks. So if they are going to the money lenders, within 10 minutes they are able to get the loans. So this is the thing, because awareness is not there. If they come to the bank, what are the facilities they can avail from the bank? Because that is not spreading. So lacking of awareness, we are not able to spread the awareness. Now recently, last year RBI has started one financial inclusion index, FI index. It is a scale of 0 to 100. 0 means complete exclusion and 100 means complete inclusion. It has got 97 parameters and 3 indices, that is the usage, availability, and access. Out of this, what is observed that March 31st, 2021, it was 53.9, and March 31st, 2022, it is 56.3. So it's a marginal increase. So still there is a lot of scope for this financial inclusion, because currently we are in the National Strategy for Financial Inclusion 1.0. That is going to be complete 2024. Now for this 2025-2030, we are already started the process. And for this process, we have already completed the first phase of discussion. It is the PAN India. Our central office is conducting the meetings with the ground levels, actual users. There is the farmers, SEGs, then fintech people, then BCs, corporate BCs, and the bankers also. What is hindering for the financial inclusion? What is why they are not getting the loans at the appropriate time and all? So yesterday only we have completed first phase with the central office. We have invited all the grassroots people to our bank. So these inputs we have forwarded to the central office. Now with the other zones, these conversation will be there, these meetings will be there, and ultimately second phase will start. That is the panel discussions with our top management and the top management of all the stakeholders. And ultimately it will be formulated in for the 2025-2030. That is the NSFI 2.0. One more important step that RBI has taken, that that is the introduction of the Center for Financial Literacy. There is CFLs. So CFLs are there, they are going to the interior of the villages. So in Karnataka, there are 18 CFLs. Each CFL is covering 3 adjoining blocks. We have covered 18 districts. As of now, that is the 38 CFLs and 114 blocks we have covered. So this is given the charge to 2 NGOs, that is the Dhan Foundation and Mother Ron. So what they are doing, they are going to the interior of the villages, they are conducting the camps with the staffs and the audio visual, because audio visual has the greater impact on the people. And on the spot, they try to open their account or for the savings bank account and this social security schemes and all. So this is being continuing. And what are the activities they are doing? They have to upload in one portal, that is called the Adapt portal. That will be monitored at the bank level, because the 3 banks are there sponsoring them. That is the State Bank of India, Canara Bank, and the Bank of Baroda. So entire, that is the, whatever will be the capital expenditure, that will be borne by the RBI, and the that is the OPEX, that is the operating expenditure, will be 9:1, shared by the RBI and the sponsor banks. So this is happening. This has only been started in 2017 as a pilot project, and from 2021 it has been scaled up project has been started. So it is the Pan India project. I urge upon that all the stakeholders that whether it is MFI products or any other banking products, the penetration should be there. Otherwise, the gullible masses, no, they will be at the mercy of this money lenders and all. Thank you very much.
Thank you. If there are any questions, we can take a few questions. I have some concluding remarks to make. I'll make that as brief as possible, but we'll take questions because I think it's much more for your sake that we are here and not for me to give a lecture. Looks like the presentation was so good that, yeah, sure, Saib.
I have a question for you that there is now this change in this regulation. How is it impacting your institution, Jana, as a SFB?
I don't think there would be any major impact.
Okay.
It takes time. Any new regulation takes time to sink in.
Yes.
That's the fundamental thing. Any change takes time to sink in. You will have some hump. There will be some degree of rejection which goes up because of the co-borrower, because of the limits. There would be some degree of rejection which comes in. But the good part, what we feel is, you're not actually over-leveraging the customer. And for the good part of the industry as a whole, in a matter of 6 or 7, or I would say, because of the household index and everything, it might take a year. But I think from next year onwards, it would be a smooth sailing. This 1 year, I think, as an industry, because of this change in regulations, change in adapting to these new regulations, might take some time. But next year onwards, it would be a good thing. And then you would exactly know which customer at 2.5 lakhs goes up to 3, goes up to MSE segment and this thing. So you can actually measure the progress of the customers also. So that would be what I look into it.
Salimat, my question is to Professor Sairam. Are there any studies to look at what is the contribution of microfinance in job creation in Karnataka?
I have not come across studies. I'm sure there some university would have done it, but I don't think there has been a significant, rigorous, impactful study. I mean, if it was there, we would have known. So, in one sense, Salimat, if you are looking at the design of microfinance, to link microfinance with job creation itself is a problematic thing, because if you are looking at enterprise, then we are actually looking at household enterprise and so on. And we need to remember that from being a entrepreneur to being a job giver is a very, very significant step up. One simple example is you can run a push cart selling vegetables. You can't run 2 push carts. The moment you say 2 push carts, that's a very significant scale up. It's not a easy trend line scale up. So I guess that's a difficult question. Also, looking at the portfolio and the size of the portfolio, you would figure out that job creation might not have. But this question would be better picked up by Sudhir, because they are the ones who are dealing with customers, moving from group to individuals, giving enterprise loans and so on. So he should be able to sort of give an insight on whether that scaling up is happening in a big way.
Disguised unemployment, because especially the family members, when the economic activity grows up, those who are vacant, those who have not been so jobless would have contributed. So family income grows up, contributing to GDP and all that.
I would agree with sir on that. There are 2 levels of job. One is on a direct employment, we as an employee give. So there would be some 25,000 people already working. If you're looking at an 18,000 crore book, almost, if you take an average of 1 crore per person, there are almost 20,000 people who are directly employed with us serving these customers. The second part is, when they get employed, the wife is employed, then they put 1 more push cart, the husband contributes to that, the son contributes to that. It will be very difficult us to gauge that kind of thing. Because it's not as a registered Udyam enterprises which comes in, which is what I think the government is trying to do it now, is trying to push Udyam a lot, so that this can be then start measured. Today it's all still the income lies with the family. The only factor we can gauge is how the family income has grown up, which then contributes more buying power, which takes around the economy, all this thing. So I think when the Udyam push starts coming and Udyam registration starts coming, we should be able to see what kind of real job creation is happening on that. I hope I answered your question, sir.
Yeah, Sauji, I have a small question to you. Sauji.
Yes, sir.
You made a statement that Bihar and Jharkhand is doing better than Karnataka as far as is it in respect of NRL you are talking about, or is it in respect to the microfinance sector as well?
NRL.
If that's the case, what exactly is something which is lacking here, and what is something is better there?
As I rightly told that focus is not given by the PSBs here. I am telling that in 2017 itself, every year Bihar was, of course, maybe the poverty line may be there, compulsions may be there, but every year 2 lakhs groups were formed and the credits were linked, sir. And Ajivika was at that point of time also that digitalizations was happening in respect of SSG and JLG also.
Basically, digitalization is happening.
Yeah, it has started, I think, 5 years back. Okay. And I think you might have seen in Odisha also. It has started 4-5 years back. 70 lakhs members are the group, women are the group members.
Right. Great, thank you.
Hegde from AKMI. A small question to RBI, sir, Mr. Sir, you said in the new guidelines, while financing in a group, we take the past income. You say 3 lakh is the total family income and all. But a woman, if would like to have new venture, there will be future, in the sense prospective income will be there. So if you are curtailing that, are you not dividing of the opportunity?
Yeah, you see, this is the policy perspective, what you are telling, no? This is the policy perspective. And on the policy perspective, I am not the appropriate person to comment on it.
Other day we had a meeting with the DG. In fact, DG had a interaction with some of the select MFIs which was organized by Sa-Dhan. At that time the question was asked regarding the limit of the income which RBI has put at 3 lakh. So what DG said is that, of course, it's already a hike from the existing level of say 1.5 lakh. So that has been done just recently. Let's see how it evolves. So we'll give us some more time. Let's watch it for some more time. Thereafter, probably we can take a review on that. This is what his answer. Yes. No. See, you're talking about the credit limit. Never it has been said that. That's what. See, earlier the loan limit was 1.25. Now the repayment can go up to 1.5. So you are talking about the repayment obligation. Loan limit is not the 1.5.
Okay. So if there are no other questions, let me try and yeah, sure.
Question, I don't know. I want an opinion from your side. This is for Professor Sriram. I am Diwakar Hegde from NAFINS. Now my question is, where do you see microfinance institutions in next 10 years? Why I am asking this question? Because the poverty is going down drastically. So today's papers, Economics Times says that India has made a very big stride in that direction. So when poverty is going down, and what is the relevance of MFI as such? Because in the developed countries, we don't find MFI concept as such. So people will be moving towards maybe small finance bank or a regular bank. I mean, in the ladder they will go up. So what as an academician, where do you see ourselves in the next, say, 10 years or so?
Sure. I will not hazard that guess, but let me try and address your question. I don't think I'll be able to answer your question, but I'll address your question. Which the answer is not coming from me, it's coming from Sudhir. So I'll sort of take up the point that he made in order to try and link up the question and the intervention that Sudhir made and the other points that the other co-panelists have made. I'll start by going back a few years ago when I was in IIM Ahmedabad. We had invited your founder, chairperson Ila Bhatt, to come and talk to our students. So typical IIM student style, one of the girl students asked, "Ma'am, what was your goal in life and have you achieved it?" Because you ask when you're coming in, what is your goal in life? Where do you want to be 10 years down the line, sort of a question. And Ilaben turned around and said, I had no goal in life. When I started off, there was a problem that we encountered in the Textile Labor Association, and after that we got together and we addressed the problem. And as we addressed the problem, there are other problems that came in. So she said it's a journey, and it's a journey which is going on and on. So that's partly an answer for your question. In one sense, that's what Mr. Sahu also said. He said that we have achieved, we thought we had achieved financial inclusion. When we went to Kolar, we had to issue more KCC and there were many more residual this thing. One of the things that we need to understand is that we get a sense of, and of course we don't celebrate achievements as much as we should. We usually, the cumulative is easier to achieve than the residual. What do I mean by that? Look at All India Rural Credit Survey 1956, when how much was informal credit and how much was formal credit. Between 56 and 1960, 1970, nationalization of banks, RRBs, etc., etc. If you keep looking at the All India Debt and Investment Survey, you see that in the first 3 decades we made substantial progress. About 30% formalization and so on. After that, we were sort of stuck because the residual is always difficult to, because we keep mentioning the low-hanging fruit, right? So what happens to the high-hanging fruit? How do you get the high-hanging fruit? I mean, that's the journey that So what came out in the panel is that 25 years of SHG bank linkage, 30 years of SHG bank linkage program, 25 years of 25 years of Sa-Dhan microfinance institutions, etc., etc. It's substantial, and I think the achievements are substantial. The question is, do we continue like this? How do we move ahead? I remember when I was on the Sangamitra board, we told Gadiappa once that we should close Sangamitra because SHG bank linkage, which was the reason why Sangamitra was set up has been achieved. So he said, no, what do you mean? There are other things to be done. We'll go to Gulbarga, we'll go here, we'll go there, and so on. So obviously, he persisted and I quit the board. Right? So, which essentially means that it's a journey which is sort of never ending. Right? Now, your question about poverty is, poverty itself gets redefined. What is, I remember there used to be Devang Patel, Devang Mehta, I think, in NASCOM, much before the Satyam crisis and so on. He used to say, Roti Kapda Makan or bandwidth chahiye. And now, I've been telling my wife, Roti Kapda Makan bandwidth or parking bhi chahiye. Parking chahiye is not a poverty issue. But it's now possibly, so that's the poverty itself keeps getting redefined. Obviously there are some people who are down below and you'll sort of put the poverty line not as subsistence, not as just basic food, but then you'll say that quality of life, and those who don't get the basic quality of life. So therefore, I think this is a long journey and a never-ending journey, and we can go on. But I'll go back to Sudhir just to round up. He indicated that it is because of the intervention of microfinance, of banking, of the type of enterprises that they have, there's a premium on time. That's one. Second, COVID has sort of indicated that you don't need to meet in groups in order to this thing. So how many of us go and attend group meetings in order to get an education loan or a housing loan? No, none of us do that. So obviously, as your enterprise goes up and as your opportunity cost of time goes up, then your time to get into meetings will not be possible. And the replacement for that is technology. The solution for that is technology. I remember a small anecdote. I remember having gone to Canada 20 years ago, looking at Desjardins. We went to one of the villages there, and the manager said, my job is the toughest job. We said, why? He says, my management has told me to push all my customers into technology mode, self-assisted mode. If I push them into the technology mode, then they'll downsize the organization, I might lose my job. If I don't push them, then I'm inefficient, I might lose my job. So it's a tough task. And interestingly, in that village, people had no opportunity cost for time. It was a farming village. They used to come to the bank in order to socialize and hang out there. So he would say, ATM, your transaction will get for. They said, we don't want an urgent transaction. We are here, don't worry, And they would tell him, if we go to the ATM, you lose your job. So this is the contradiction that we'll have to deal with. So more and more we move towards technology. We move towards impersonal, data-based assessments, and there is merit in that. I'm not saying that there is no merit in that. There is significant merit in that. That depends on how, at what level of technology you are in, what sort of employment generation do you need to have, and what are the efficiency parameters on which you need to work. And therefore, we necessarily will move in that direction, which then creates its own issues. I think that broadly is this thing. And thanks a lot, Mahesh, for bringing in this phases of development. Obviously, in the first phase, it was all about proving. In fact, if you go back and look at SHGs broke, SHGs and the microfinance broke multiple paradigms. This was the first time in the policy articulation that women were at the center point. Otherwise, your entire policy articulation right from 1908, if you look at it, Royal Commission of Agriculture, etc., All India Rural Credit Committee, it is rural equals agriculture equals credit. That was the policy orientation. SHG changed everything to upside down. It said men, consumption credit is okay, and it need not be agriculture, right? And aggregation of transaction need not happen in a bank premises, etc., A whole lot of things that change. I think we should look at the global microfinance's contribution as a very significant contribution in changing the paradigm of how microfinance is dealt with the poor from the 70s onwards. It's, be it Grameen, be it our RRBs, be it our SHGs, be it Latin American model of village banking, all these basically change the fundamental paradigm of how financial services are accessed. Now, that goes back to Sudhir's point of after this what? Again, after there's additional services, savings. As social networks are breaking down, you need social security. I mean, my grandfather did not need a life insurance policy or a health insurance policy because the family network took care of it. We were in a joint family, right? And if the joint family was not there, neighbors would be there. I remember in my childhood, if you run out of sugar, you go to the neighbor's house and borrow sugar. That paradigm is no longer there. I mean, that doesn't happen. You don't even borrow bandwidth from anybody else these days, right? So, in that sense, as society evolves, what we define as poverty, what we define as essential services evolve. I think what we have done today is to flag it and say that, look, these are things that are happening. These are things that we are taking stock of. And with RBI also, this 3 lakh rupees and all this, it's a passing phase. When they said 60,000 rupees, people said, oh, what the hell. But you go back and look at the portfolio, nobody is breaching an average near about 40-50 at that time, right? So in that sense, it is more about a journey, and all said and done, we need to understand that RBI's primary concern is client protection, and only secondary concern is development. I mean, let's be clear about it. I mean, if they go development whole hog, then they should be ready for failures, which typically as a regulator with fiduciary responsibility, it will be difficult for RBI to take a call. So since he can't give a policy perspective, as an independent person, I can comment on RBI also. So that's where I am. Okay, I'll stop here. I think we are running deep into the next session. Thanks a lot for inviting me. Thank you for being patient with me. And I'm always happy. I mean, what can you, the best gift you can give a professor is a mic. So let me stop here. Thank you.
Thank you very much. Please be seated. So there is a token of appreciation from Sa-Dhan sent to all of you. Thank you for being here. So I would request Professor Sriram to extend that token of appreciation to Sudhir. This is Bidar art, from Mr. Shahu. So this is a Bidar art, and it has been sourced from SRLM. So there women, they have. So to Mahesh. To Mr. Biswas. To Sudhir. And I would request Mr. Momen to extend the appreciation to Professor Sriram. A photograph of the panelists, do you want to take, or ho gaya hai? Okay. All can stand and can have a photograph. Thank you very much. There will be a tea break for 10 minutes. Then we will come and there will be a presentation from Kartik Ramdas on the microfinance situation in Karnataka. Thank you very much. So in 10 minutes of time, it is 11:45. We'll be once again resuming at 11:55. And my colleague, Mr. Kartik Ramdas, Vice President of Sa-Dhan, will be giving you the presentation. Thank you very much.
Good afternoon, everyone. This is just a small run through of financial inclusion in Karnataka. So we have tried to take some data from the SLBC and NABAARD state focus paper, and we have also taken data from the credit bureaus, and We have also taken data from NRLM, the SSG bank linkage portal. So these are the 3 to 4 sources we have used for this small presentation. This will just give you an overview of how Karnataka is doing compared to other states. Yeah. Yes. So before we go into the finance, like an overview of the demography of Karnataka, as you know, it is the 7th largest state in the country with respect to the area, and but then like irrigation wise, 2/3 of the land is only rain fed. So we see a lot of frequent droughts. Largest producer of coffee, there are a lot of few crops where Karnataka is the leader, like coffee, raw silk, cereals, and second largest in cooperative milk procurement, and third in flowers. So there are a few crops where Karnataka is the leader. So this we try to relate with livelihoods options that are there for financial inclusion. Population density, Karnataka it's 319, slightly lower than the national average of 382. This again we try to relate it with the financial inclusion, the branch penetration and all that. 61.3% live in rural areas, and literacy level is quite high compared to national average, 75.36%. So that helps, especially when in educating borrowers, like financial literacy and all that. And with respect to state's gross domestic product, agriculture has 13.15%, industry 20%, and services 66.53%. There has been a growth in agriculture contribution last few years slightly. There has been a positive growth. State FI profile, financial inclusion in Karnataka, as you all know, Karnataka has been the cradle for banking. Like we have 7 banks which have emerged from the state. And we also have this rural self-employment training institutes movement that which is there present all over the country, which promotes entrepreneurship. Even that has emerged from Karnataka. So as on date, there are 11,654 branches. Out of that, 50%, more than 50% of them are in rural and semi-urban areas. So that ways, the rural and semi-urban penetration is also relatively good. And BC network, there are 8,669 active BCs. The major players in BC are State Bank of India, Bank of Baroda, Canara Bank, and we also have 136 functional FLCs in Karnataka. So that again, we try to relate with the financial literacy. So under priority sector lending in 21-22, there was 75% achievement. 2.18 lakh crores was the disbursement under PSL. Out of that, about 50% under agriculture, and we also have 80,417 through MSME. So agriculture and MSME, as you all know, even Karnataka, they constitute the major portion under PSL. So when we narrow down the districts, which districts have major PSL lending, so it is Bengaluru urban, 70,000 crores, Dakshini Kannada 13,000 crores, Belgaum 12,000 crores, Mysore, Mandya. So these are the top 5-6 districts where majority of the private sector lending disbursement has happened last year. And Karnataka also has about 45 lakh KCC holders, and the average loan disbursed under KCC is around 1.14 lakh. So this again, when we see compared to what is disbursed under microfinance, I think it's much higher. So yeah, since 2016, under the Prime Minister crop insurance scheme, so there are about 1.08 crore farmers covered, and the average amount claimed comes up to 12,592 under crop insurance. The state CD ratio, credit deposit ratio, is around 68%. It has come down. It was 75% in 2020, 70% in 2021, and it is now 68.24%. Udupi, Uttara Kannada, Dakshini Kannada, Bengaluru urban have CD ratios less than the state average. wherein we have this may be because they also have high deposits. It may be due to that. And districts like Chamarajanagar, Devnagari, Haveri, Mandya, Raichur, they have CD ratios more than 100. Interestingly, SFBs have a higher CD ratio. That also may be because they may have lower deposits. So state is also one of the front runners in SHG bank linkage and microfinance in the country. So in SHG bank linkage, as per the NRLM bank linkage portal, there is the loan outstanding of 20,000 crores, which is second highest in the country. The first is AP, which is around 49,000 crores. So even SHG bank linkage, Karnataka is the leader, one of the leaders, and in microfinance, it has a portfolio of 24,000 crores. It is the third highest. So this data is from the bank linkage portal that is shared through the core banking system by the banks, updated one. Even the quality of the asset has been quite good. Even many of you would have seen in southern India, like Karnataka has been performing well with respect to collections compared to other southern states like Kerala, Tamil Nadu. So that wise, the quality of asset has been quite good. Even in SHG bank linkage, we see it to be good, and even in microfinance. We have many leading MFIs emerging from who emerged from large MFIs emerging from Karnataka, like and also SFBs and BCs. BCs, if we take SKDI, DP, they have close to 16,000 crores portfolio, one of the largest BCs in the country. And SFBs, we have Ujjivan, Janna, who are based out of Karnataka. MFIs, FinCare. MFIs, we have Credit Access, Chaitanya, Samasta, large MFIs, if you say. So that ways, Karnataka, like banking, microfinance, SFBs, that ways has been one of the front runners, be it institutions emerging, be it the portfolio outstanding, be it the portfolio quality. So all these aspects, Karnataka has been one of the front runners in financial inclusion in the country. Next. So this is district-wise SHG bank linkage, the loan outstanding. So Dakshin Kannada has highest SHG bank linkage. So this I would like you to mark this. Maybe when you go to the microfinance, you would find it an interesting thing. So yeah, Dakshin Kannada has about 3,565 crores under SHG bank linkage, one of the highest SHG bank linkage in the state. Next, and Belgaum also has about 1,256 crores. Next. The other districts which have high outstanding are we have Hassan, we have Kolar, Mandya, Mysore, Shimoga. So these all have about more than 1,000 crores loan outstanding. So this is something I just want to share. So these districts, we also compare this with microfinance and see whether the same districts which are also leading in microfinance as well. Under NPA, under SHG bank linkage, the state average is 2.07%, less than the national average of 2.13%. Most of the NPAs, as we know, it's usually in urban pockets. We see in Bengaluru, it's under SHG bank linkage, and Udupi, Yadgir. So yeah, these are the districts. Next, sir. And some districts they would have had high NPA, but then would have been written off. Like that is also there. But then if you see Dakshin Kannada, the NPA under SHG banking is very less. But then we have seen like under microfinance what has happened the last like few years back, 2 years, 3 years back. So this is a contrasting thing that we see. Like yeah. This is microfinance in Karnataka. As we are telling, like it has around 24,000 crores when we take only microfinance institutions, not including SHG bank linkage. So so districts like Mysore have more than 2,000 crores. Mysore, Tumkur, Belgaum. So here you don't find Dakshin Kannada, which was having highest But then we see states like districts like Mysore, which was already there in SSG bank linkage. Belgaum was also there. Mandya was also there. Yeah, so few districts are common in bank linkage and microfinance. Next. Next. Sorry, this is a bit. So this I just want to show like the penetration wise. If you see like when you take the total number of households in the state, it may not be eligible households, but then total number of households, and you look at the microfinance active microfinance borrowers. So that ways, if you see. Karnataka is around as penetration of 29%, 29.3%. One of the highest, like Odisha has around 31%, and yeah, Tamil Nadu has 40%. So Tamil Nadu has the highest, but then Odisha, Karnataka is also one of among top 5, top 3. So this is microfinance NPA in Karnataka. So Udupi, Dakshin Kannada has highest NPA as per the credit bureau reports. Yeah. This is March. So these like Belgaum and all we see very less, 1.18%. So state wise it's around 1.63%. State, sir? No, it'll be 0.00. That zero did not. Which one? Which one, sir? Which district? Okay. Okay, it may be because of that, yeah. Yeah, it may be because of that, yeah. Yeah. Yeah, that one we can show first, sir. The previous one. So this is player wise, like MFIs, like we have the as Gisa was telling, MFIs have highest loan outstanding when you take microfinance as. So next, banks and NBFCs and SFBs. So like when we take at the national level also, like it is more or less similar to the national scenario. Like microfinance, like NBFC MFIs have the highest loan outstanding, followed by banks, NBFCs and SFBs. Even the active loans, the same picture we have. NBFC MFIs lead in Karnataka with respect to microfinance is concerned. Yeah. Next. Yes, sir. So yeah, banks. Yeah, it's more or less same. So this is PAR levels of Karnataka compared to the industry averages. This is PAR 30. We have taken as on August. So it is. So as we are telling, like Karnataka has been doing quite well compared to the national averages. So that way is like. Even if you see player wise, we have banks banks and SFBs having relatively higher PAR compared to NBFC MFIs. NGMFIs, though the portfolio is very low, very minimal. That is first is Karnataka, bottom is national average. Next, sir. Yeah, like NGMFIs, like this is only microfinance institutions, so we're not taking SSG bank linkage. Which one, sir? So this is, we also try to see a relative like indicators which may have some future risk. So it is not, when we say potential risk, it is not risk now, like it may be in future. We look at multiple parameters. We take the economic potential of the district, we take the average loan outstanding, the multiple lending, the PAR 30 bucket, difference in PAR compared to the previous quarters, portfolio growth. So we take a list of 5-6 indicators and try to look at what are the risk levels of different districts in Karnataka. So that way is like you can see, like we have few districts like Udupi, Dakshin Kannada, like they have about 5, more than 5. We have Mandya, we have so these districts, like when we these districts, the parameters are, they are high in average loan outstanding, they are high in multiple lending, they have seen higher growth, they have also the economic potential is relatively lower. So all these parameters put together, a relative risk score is arrived. So which within the 30 districts, it is which are relatively more risky, which are relatively less risky. So that is what this shows. Yeah, so it, it is same for all states. Yeah, Bangalore urban, yeah. Correct. That may be, sir, because like the portfolio growth may not have been there, and the portfolio, like multiple, like there not been much lending in that district. So when we take a list of all 5 indicators, so in that parameter, that is why, like as you said, like as you rightly pointed out, it will not be good to just look at the number. You should also go into detail. So which indicator is high, which indicator is low. So that would give you a correct. Sir, it is economic potential is also a thing. So multiple factors put together. So we see, like so this thing we also share with our members, like district wise, like which indicator is high in which district. That level of also you can see. It is not only the risk score. The next thing is which indicator is more in which district, which indicator is less. That also can be seen.
As per Sa-Dhan report of last quarter or earlier quarter, Mysore and Chamarajanagar districts were highly exposed, more than 80%, and high level of risk those 2 districts carry among in the country. Here only from credit bureau. Now I don't know from which they have derived, but the fact remains that these 2 districts are identified as high risk districts. We should not expose ourselves.
Usually one more thing, sir, what happens is, and that is what, sir, like what happens is, over the period of 3-4 quarters, it is a dynamic thing, so it is not we don't do it once in a year or once in 2 years.
Consistently, Mysore and Chamarajanagar districts are appearing in the report. The credit rejection is high. And I think what
We can next thing we can next.
is that actually the higher exposure these 2 districts are having. So you've been asked to have exposure, but if you see the potential taking into account of other parameters like economic potential of the district and other aspects which is the report, probably it gives a better picture.
The economic potential is high, but then multiple lending if you see is one of the highest, 4.53, and PAR is also one of the highest, 4.29. So like that, like when we look at multiple factors, just don't look at parcel. We also look at economic potential of the district. Also look at the over indebtedness, the multiple lending percentage.
Where to do business or not, our job as an association to show the data. This is what we are saying. So on the basis of that one, so we have that list. If you see the left side, risk score, the risk score is there. So according to our study, this is the higher risk. I mean, these are the districts which are having higher risk. But the business and also your this intervention is at the prerogative of your due diligence and everything. So this is what we have. So we source the data from Equifax, we have put it in the international standard of parameters, then we are seeing this one.
These are, as I was saying, it's more of an indicators like to help decision making of institutions.
You should read both together. You can't read separately. The earlier other reports talks about the number of credit exposure in that district. It talks about more of credit exposure. Here it talks about a wider picture in different aspects.
Correct.
So if we can just finish it, Karthik, we are running out of time.
So this is as per NABAARD state focus paper. Broad projections for Karnataka for 2023. So yeah, I just want to also share that. And sector-wise, like it is projected like agriculture would have a requirement of 48%, and followed by MSME 38%. So these are the two sectors. As a state, it is projected to have highest demand, followed by housing. Yeah. So, thank you. So like this, like we for example, like these reports, like we keep sharing with our members. So it is more of like we analyze the data and help institutions taking decisions. So it is not like we don't say like you don't go in this, don't operate in this district or don't operate in this state. Just when you want to plan for an expansion or you're planning for disbursement. So also look at this. You know, how is this concerned district faring with respect to these parameters. So that is the objective of this. Thank you. Thank you everyone.
So wherever we do our this presentation, it takes a lot of time because this is one of the very insightful thing we do. And in Sa-Dhan we do have state-of-art analytical center for data analysis. So this is the output of it. Every month with our members we share that one. I once again reiterate that the business, yeah, it will be from there. So I reiterate that the decision of the intervention and the business is at the prerogative of the respective institution. Our work is to show the data, what data is saying. Now it is the district level data. Maybe in certain pockets there is a gap. You can always work there. So it is at the, and you guys are very senior guys and you can always take the right decision. So now next session, Salimat sir has already told me that, I mean, now we are killing the time, then I'll be residing his time. But sir, it will be a request that if we can make it in 35-40 minutes would be good for us. So the next session is microfinance sector contribution, opportunity and challenges. So it would be good to know from you that where have we reached in the state, what are the challenges, because this is one of the important segment on which this report will be prepared. So not only analysis of the of your challenges, please do suggest us as well. And we are really grateful that Mr. Salimat sir, we call him Salimat sir across, like in our Sa-Dhan, he is not Vivekanand Salimat, he is Salimat sir, and one of our reference person. We are very honored to get him as a moderator. He is also our ex-board member. So, so in this, Salimat sir will be moderating. Then I would request Mr. Naveen, COO, IIFL Samastha, to be coming here and grace the panel. I'd request Mr. Anand Rao, Joint MD Chaitanya FinCredit, to be here as a panelist. Anand, where are you? Sri Gadiana Power, CEO Sangamitra. He is also our ex-board member. And I'm looking forward for Sri Krishore, COO FinCare Small Finance Bank. Thank you very much. Over to you, Salimat sir. Karthik, can you organize this mics? भाई वो जो माइक्स है उसको थोड़ा सा दे दो, कहाँ पर है? यहाँ पर एक है और हमारे पास और एक होना चाहिए,
दो इधर
3 होना चाहिए. Sorry, sir. Mr. Diwakar Hegde, MD Napkins. No, sorry. Please do come. Sincere apology, because there was some like this cutting and all those stuff, so I have missed your name. I'm extremely sorry, sir.
Okay, again a warm welcome to all of you for this panel discussion. Since we started late, we have been advised to wind this up within a period of 35 minutes. We'll try as best as possible. In the first panel, the macros perspective of overall microfinance growth, then financial inclusion topics were discussed. In the presentation, Mr. Karthik presented the Karnataka picture. That was more of statistics. Now we will try to point out certain subjective elements of how the microfinance sector is going, because the numbers are already there. Before I start, it reminded me of one small story. There was a desire to start a footwear business in one of the African countries, which was least developed, and two persons were sent to explore what is the potential and do that. So we went, and one person came back saying that a lot of people do not wear the footwear there, so there is no scope for footwear. The other person, he came, a lot of people do not wear footwear, so there is a potential for this. So it depends upon the perspective or nazriya. How do you see this? If you look at Karnataka picture, J.J. Memon told what is the total portfolio in India and what is the portfolio in Karnataka. So 3 lakh crore is in India and 80,000 crore is in Karnataka, which constitute 37%. Okay, mind-boggling. If you look at population, 80,000 out of 3 lakh. 18 is also okay. 18, not 80. Yeah, so it's still a significant portion. In terms of population, Karnataka has 4.5% of population of India. In terms of geography, it is 5.83. But look at the GDP. GDP, all India, everybody says it is grade 7. Karnataka GDP is 9% growth. Look at, so it is like a lot of people are having footwears. So there is no scope for microfinance. You can't say that. So, be it in every field, Karnataka is shown. And one more important statistics is, most arid state in Karnataka is after Rajasthan. In India it is more arid state. That means irrigation potential is very limited compared to all other states. In spite of that, if it is growing, it is what should we say this? Should we say it is fortunate, or is it having an entrepreneurial culture? And as far as microfinance sector is concerned, least intervention from the state, free for all. As a result of which we started AKMI, and then said if nobody is regulating, let us regulate ourselves. As a result of which systematic growth has been happening in Karnataka. So these are some of the positives of Karnataka. Having said that, now I will request each of the panelists, because we have distinguished people here representing various subsector. Gadep Norzi and Hegdeji are largely into SSG mode, and Kishore is into SFB and one of the large microfinance organizations, and both of these two represent NBFC. And I represent a small NBFC, but also other social sector initiatives. So in terms of diversity, there is a significant diversity. So now I would request from Kishore again. So what do you see as opportunities in Karnataka? Because you have transited from NBFC. Sorry. Transited from NBFC, and also increasing not only the portfolio in terms of assets, now also liability. So what do you see as opportunities, and also what do you see as challenges for the growth as well as distribution?
Thank you, Saribat sir. And at the outset, let me thank Sa-Dhan, and of course in association with AKMI and the sponsorship and support by NABAARD for having this financial conclave, inclusion conclave, which is very imperative that we take it forward. Addressing your question, I think you've given some answers. Karnataka has got a lot of opportunities, and that is being used. From a SFB perspective, which we have transferred from a NBFC MFI or NBFC to NBFC MFI and then a SFB, the best opportunities come for us probably is the deposit linked things which we can do to the customer. Because most of the customers never had the opportunity, and we always believed that microfinance is something holistic, which includes credit, maybe insurance, and also the savings. So this is one thing which has come in, and all we microfinance players here have been doing the insurance. Maybe it's the credit, but some do some kind of a bundling or some kind of a additional things to customers to make them get onto some better insurance, although state does give in all that. And on the savings part, NBFCs cannot, but banks are able to. Now we see that the trend among the customers is they would like to save, but there is no guidance. And as the earlier panelists did mention sometime back only, that one is of course the interest of the customers, the other is that there should be some kind of an initiative taken by somebody to make them that understand that this is what it is. They are more gullible who don't know what the issues are. So I think the opportunities are immense. Once people start saving, their outlook also starts getting into a different thing. The repayment culture is already good in Karnataka, and it will still continue. A lot of efforts are there to ensure that the state does not get into any kind of controversial problems and all that. So AKMI has been leading that, and then the support of all the institutions which are members helps. The only thing is, together we can always achieve more, as we always say. The opportunity here in microfinance is definitely there. We are seeing that the entrepreneurial skills and the lack of maybe it's more rainfed and not other things, as we just saw that it's arid zone and all that. Opportunities will come, and identifying those particular things which the customers need and then giving it to them is what should be the hallmark of us people who are here, so that the customers feel that be it a SFB, be it a bank, be it a NBFC or an MFI or an NGO also, they are for us, and that's what is customer delight. Thank you.
One follow-up question. For him only, just the premise for which the small finance bank came into existence was that microfinance sector was always saying that the cost of delivery is high, cost of fund is high. So RBI allowed, among other things, that you access deposits from the public, reduce your cost of funds, and try to deliver at a much more moderate or lower level. So how do you see as that happening in this space?
Yeah, it's been happening, and if you see, some banks have started, SFBs basically have started reducing. maybe because of some issues of the COVID, the delinquency levels and all that, and there is probably no immediate requirement, although RBI as such is literally asking all the SFBs to reduce or at least have a look at their structure of pricing. And they are going forward, I think they're not imposing, but giving directions or hints that you got to do something more to the customers by lowering the interest rates. Give them more facilities, but at a lower cost. I think that will definitely come in.
Thank you. Now I will turn to Mr. Anand, who has founded Chaitanya, and now the new owner is is a tech-based person. So my question to Mr. Anand is on technology front. How far they have taken technology to improve the processes? So in terms of that, what is their contribution? Any innovations that is taking place? And also the challenges they face, especially the new regulation, RBI regulation. Are there any challenges? How are they coping with these challenges?
Thank you, sir. Thanks to Sa-Dhan and NABAARD for organizing this. So this is our view. See, one is, if you see microfinance sector in Karnataka, I mean, in the last presentation we saw penetration of around 30%. So I think that is the limit, in the sense that we may grow marginally, but it is really from a group lending. I'm talking from a group lending. The growth will be very, very less. I think you go to any village in Karnataka, you will find microfinance customer. Now the question is then, is it the end, right? But I think what we are seeing is, as I think what the RBI regulations also is pointing out to, this is going to become more competitive. So if you're able to provide the group lending at a very efficient model, people will come. Okay, you may not see a growth in market. You will see shift in people moving from one organization to another. So you have to be very efficient. And so one is microfinance becoming more like a commodity. So that market I don't think will go away. As we have seen across many discussions, what I think we as an industry we are facing as a challenge is, how do we get differences in lending amounts, right? We have seen customers, one wants even if you say in a group, one wants 30,000, one more wants 2 lakhs, right? The group lending model is very efficient, but it is not able to provide that differentiation. Of course, many of us are trying it, and that is a need. They want that. So one side you are saying that the JLG model is breaking. The other side, individual is taking. But just like any tech platform, you cannot give out one and go to the other, right? You have mobile, but you still have web. You have digital, currency, but still you have cash, right? So how do we do both is going to be, I think, a key as we go forward. And I think tech there will become very, very, very important, right? If you have to give a 2 lakh loan in a group, you need to then get into tech. You need to see data analytics, right? If microfinance institutions don't do it, fintechs will do it, right? Because the data now is available in credit bureau. So we think there will be a base model which will be based on very efficient operations, where customers will ask that if you give me a lower interest rate, basic loan, we'll go to you. And there will be customers who say, I need a larger loan, I'll be ready to pay that amount. And companies that or organizations that can offer will take that. So we see that's how the tech will come in. And I don't think I think the beauty of our model is, it is, as I think it keeps coming back, it is both tech and touch, right? And I think if we can build on it, we have a very good future, because whatever competition comes, if a tech player comes without the touch, they will not be able to solve, because ultimately you have to collect back the money. You need that touch. Our borrowers are very sensitive. So I think we have learned it. We are quite sensitive. I mean, we have gone through crisis over 15-20 years now. We know how to deal with our borrowers, right? So that is my answer, sir.
Thank you, Mr. Anand. Now I will go to Shri Hegdeji, who heads NAFIN, because it's a model which they even persist. If you look at the SHG is usually bank-led, but there are only a few institutions. One is the NAFIN, the other is Sangamitra. So obviously, how far there has been growth? Are they been able to get fresh groups? How do they look at first business in SHG bank lending? That is one part. The second part is also how does the regulation affect this? Because this is income and all that. So what happens to the existing members, whether their income still is below what has been regulated by RBI and all that. Third is also about the repayment. These are the three areas which I would like you to throw light.
Thank you, Salimat sir. First of all, I congratulate Sa-Dhan and AKMI for organizing this state level conclave, and I thank them for inviting me to share my thoughts during this program. It's a really great opportunity to interact with the industry stalwarts in the state of Karnataka. NAFIN's, it has already completed more than 2.5 decades journey, and it has been set up by NABAARD, and also Government of Karnataka also joined hands with them, and other banks also joined hands to showcase the MFI sector, that how we can set up a model MFI kind of thing in the NBFC sector. So having said that, we started our journey with financing SHGs. You all are aware of it. Many of you are partners of NAFINs. So SHGs, over the period of time, what you have seen is that there is a very good competition given by banks, or we are giving good competition to the banks. Ultimately, the SHGs will look at where the loan is comparatively cheaper. End of the day, that matters. We say in microfinance, rate of interest is not very important. But I find that during my interaction in the state of Tamil Nadu, in Karnataka, Mysore, Chamarajanagar and all, SHGs have expressed that MFI loans are slightly costlier as compared to bank loans. And I have seen, let me be very frank with you, they have, some of our partners have switched to banks. I don't have any grievances on that, because ultimately we have to go for the new geographies, new areas where banks have not gone. MFI has to cater to those people who have not been served by the regular banking sector. So that way there is a good competition. I think it is good for the sector, I feel. Small finance banks are really giving a very good competition to MFIs. But MFI has got its own, the dynamics, which makes very near to the customer. We go to the doorstep, we appraise there only, then and there only we decide. So these are the things which may not happen with a bank. And having said that, for NAFINs also, the journey has taken a different shape. We have moved from, or we are giving equal weightage. As much as for SHGs, we are also giving equal weightage for the JLGs. Through BNDC model, we have moved to direct lending model now. We are having more than 250 branches across India. In almost 20% branches are in Karnataka alone. And where we give direct lending, that is only for joint liability groups. That approach we are following, like many other MFIs are doing it. Having said that, wherever the BNDCs have done very well, our focus is there. We are joining hands with them, but we are facing challenges in terms of, I don't say RBI has really created a wonderful, because of this regulatory mechanism, they have created an equal playing field for everybody. So as in the inaugural session you have seen, there will be initial hiccups, initial difficulties. It happens with every change. So there is a higher rejection. As a higher rejection, it is going as high as 45% to 40 to 45%, because the customers, especially in the SHGs, BNDCs are expressing that their SHGs out of say 16, 17 people, hardly 7, 8 people are eligible. Remaining are not eligible. So this kind of some sort of discrepancies are happening. There also we have got solutions. We can make them as a JLG and we can finance them. So where there is a problem, there is a solution. But I am happy that these SHGs members, they can come to us as an individual borrower. We have got that product now. So what I want to say is we have to innovate. We have to bring in new products as per the needs of the customer. If that is the possibility with you within your organization, I think then you can cater to our clientele, whether through MFI or through MFI plus, credit plus approaches are there. So that way I think NAFINS has been able to do it, and we are very confident of doing it. And Karnataka has got, I think Sa-Dhan has already shared the in their presentation, beautiful opportunities are there. Financial awareness is best in the country. And there are aspirational districts, Government of India is giving special focus for aspirational districts. In Karnataka, there are 4 aspirational districts where the people, if the bottom of the pyramid, they want to become the 5 trillion, as our Prime Minister says, 5 trillion economy, the part of the 5 trillion economy, then they need the push, which only MFI sector can also join hands with regular banks, so that their aspiration, their dreams can be realized, and they can have their own sustainable source of income. So I feel there is a great opportunity for all of us. At the same time, I've seen my other players also, the rate of interest, there is a scope for bringing down or rationalizing, I don't say bringing down or anything, rationalizing the rate of interest. I think Sa-Dhan can do some work on that. Okay, it is left to the individual institution. Still we see that 25, 26, 27% and all is happening. So I mean, we can think about it. I am also part of the team only. I'm not saying I'm as an outsider. As a part of the team I am seeing. So whether we can, if they want to take up some say economic activity, income generating activity, whether we can think of 30%, any activity is viable. So this kind of brainstorming also is required for the MFI sector. But if you see after COVID, the sector is doing wonderfully very well, and our collection rate has gone up, maybe 98, 99%. All are agreeing with me. So everybody having the same experience. But there are some sticky areas which happened during COVID time. It needs some time to get out of that. It needs that. So, but another challenge I feel is the technology. Our another panelist has already highlighted that. NAFINS, I think we have to gear up to some extent to bring in the latest technology. And at the same time, I think you should not lose touch with the customer. Technology should not be a sort of should not take away our touch points or regular contact with them, because MFI is successful as long as you are in regular contact with the borrower, the women in the village, so that there is a confidence built up, the relation is built up, and they are with us in the whole journey together. I think this is what I wanted to share at this moment. Thank you very much.
Thank you, Agdezi. And now I would request Naveen Kumar, who is the CEO of Samstha. In terms of in microfinance, the greatest improvement what microfinance industry has said is turnaround time. Compared to banking industry, it has been the highest. And Shri Agdezi mentioned about rate of interest, but even today, access has become more important than the rate of interest. If you go within the customer, I have not seen anybody grumbling too much about rate of interest as long as very quick money is delivered and recorded at their step. Therefore, we need to look at our own thinking. Some more things I will share later. So in terms of Samstha, it has grown very rapidly. What are the innovations they are able to do in terms of this kind of a growth? What improvements you are able to bring about? How are you contributing within Karnataka? I would like to throw some light on that.
Yeah. So good afternoon all. And first of all, thanks Sa-Dhan and NABAARD to organize this seminar kind of thing. And then inviting Samstha for as a panelist in this stalwarts group who is present here. So good afternoon once again to all of you. So if we experience, we'll share the experience how Samstha we are doing, and what we were doing before 5 years and now what are the improvements we have made. So 5 years back we were part of the majority of the business was in banking correspondent model. So there the time lag was more. When we started growing our own business, so we work on many processes, online disbursement was also with earlier we were not used to do more disbursement in a day. There was a bottleneck over there. So we changed that bottleneck. And now also recently we are also working on e-sign and e-KYC. So right now 20 branches we are doing pilot with e-sign, and we have also got the approval for e-KYC. So now we are also working on how to improve the efficiency through the technology. So e-KYC, e-sign, and will be time saver for us, and that will also reduce the cost of maintaining the documents and all, reducing that. Apart from that, we have also every crisis gives us something. Okay, it takes us many things from us, but it gives us also many things. So if you see 2016 when Demon happened, so the industry which was mostly on the cash disbursement moved to online disbursement. So this crisis also gives us a thought or pressure or whatever we can say, but at least to move towards the digital collection. So we are also putting footage on the digital collection. We are not so great, just like it will be around 7 to 8% collection only digital for us. But I know a few of the organizations who have done very well, and there are few of the state they are 100% digital collection. But what we are trying to do here, which will bring the efficiency also, first we try to reduce the cash at branch. So we have tie-up with so many BC vendors, and there people can collect the cash and go and deposit there without taking coming back to the branch with the cash. So one improvement is that. And for that, because many vendors are there, their presence in different geography, or somebody is stronger in some geography, some is other. So we have multiple vendors for that. Apart from that, we are also ready with a option where we can generate a token. Suppose we do a center meeting, we collect the cash and we can give it to even the one of the group member, entire cash, we can generate a token, and that token, if they will give the BC vendor, he will get all the transaction detail, and that can also be entered. So we are ready with that. We are going to start pilot for that. That will also slowly we'll be having improvement on the collection side, or digital collection. So that's the journey we have so far, and in that way we are improving the efficiency. Yes.
So thank you, Nayan, by throwing light on how efficiency is being brought about technology. Now I turn to Shri Gudapnar, who is a veteran, not at the last but not the least. My question to Gudapnar is about SHG model. During one of the important fundamentals of SHG is meeting, group meeting, and interaction among themselves, leadership and all that. That was challenged during COVID. And supposing if there are no other interaction than only financial transaction, they say as long as we repay you, why are you bothering about meeting and all that? But fundamental of group that it is a social institution, and along with the finance there should be other things. Is it happening? Like Professor Sriram said, time has become a premium, so people do not think that they should contribute so much of time doing and all that. All those basic things were required 20 years back, but now how the situation has changed. How are they coping with this? Will it survive? How long? These are the questions I would like you to answer.
Okay. Good afternoon, friends. At the outset, I would like to compliment Sa-Dhan for initiating state level conferences, because the issues which we are going to talk on 14th, 15th of November, it is a country level issues and maybe in international issues, where the state issues will not come into the picture. This is a good move. It should be continued at least once in a year, so that we get the feedback of the state problems which can be taken up at the apex level. That is my request. It is a good initiative, I should compliment. Now coming to what Salimut sir was asking, I mean the SHG concept itself, as many of us know, it was in a great danger. There was a serious threat for existence of SHGs itself. We have seen for last 15 years I have been the CEO of this company, and how the developments have taken place. About 15 years, in the before 2010, what were the quality of SHGs, and after 2010 onwards, what is the quality of SHGs today? There is a lot of difference. We used to discuss in the board meeting about there's a runner, my Fernandez, my chairman, is the father of SHG movement in the country, and he was always talking about SHG. Without SHG, he will sleep with SHG, drink everything with SHG. That is the concept with which my chairman made us to think about it. And SHG is there are different issues altogether. It is not only for mere lending. Lending is only a secondary issue. For SHGs are promoted for capacity building, empowering the women by the NGOs. My job is to provide financial support, making them economically viable. Two will work together, then only the benefit goes to the group. That way, we do not promote our own groups, we depend on the NGOs or CMRCs, that is CMRCs or MyREDA promoted organization. We give the incentive to the SHGs. SHG also we give for the first time in the country. We are giving incentive to the SHGs. Nowhere in India, no other organization is giving this benefit of 0.5% incentive to the groups after availing the loan. Similarly, we give also incentive for nurturing these groups, maintaining these groups by the NGOs, varying from 1% to 2% and all that we do it. But what my friend Salim asked was whether they still meet together, conduct the meeting, whether it is really happening, especially during COVID period. COVID period, all of you know, there was embargo, barricades were put in the villages, we were not allowed to enter into the villages. And my credit officer used to go telephone, ask them to come outside the village and repay the loan. That was happening on their own. But group meetings all given a go by during that time. Let me admit, that was not happening at all. But last 1.5 years, since August, September of 2021, things have improved. We have gone out of COVID and people are meeting, and the weekly meeting concept is an ideal situation which is not happening, let me tell you. At least once in a month they are able to meet, record the minutes, collect the money, collect the savings, all that is happening. But the quality of group, what the promoters in the early days had done is not there. The quality has deteriorated over the years. Now, I wanted to bring it to your notice. When ready-made food is available, didir food, now instant food is available, why people should go, save first, meet them, attend the meeting? If they do not attend the meeting, they have to pay the penalty. All this rigorous imprisonment, why anybody would like to undergo and still continue to avail the law? Now easy, MFIs have come, JLJ model or NBFC MFI, whichever organization which are doing, easily 3 days training, because I had also one model, JLJ model we started, because those who were not able to get loan among the SSGs, because majority would have already taken loan from other, to make them available, we started JLG also on a pilot basis. There also, we started giving loan to such people, those who are otherwise ineligible in a group. But this, what I was trying to tell, group concept is working, but the NGOs also are, the interest what they had earlier, it has become a livelihood issue for them rather than livelihood for the people. The NGOs whom we are depending on them, they are not spending time on SSGs for nurturing them and keeping the bookkeeping. In fact, we provide training to the SSGs, because bookkeeping is the most important thing for me. Without the books are updated, I will not be able to make loan assessment. So we ensure the training is given wherever the weak groups are there. We provide support, financial support. Anybody who is good in bookkeeping, they will be trained, and within the group members only we are asking them to write books. Because frauds have been perpetrated by the outside book writers, because 30-40 groups are books are written by one boy, matriculate or PUC fellow in a village. He used to earn his livelihood. But later on, people believe, illiterate SSG member, they give money to this fellow to deposit into the bank, and that fellow has misused. Therefore, we have made it compulsory that the group book writing has to be done from within the group members. The responsibility lies with the group member. Therefore, we provide training at our cost. And even the rotation of leadership, which was terribly lacking. Once a president, always a president. That used to be power center. And misuse used to happen. My money, whatever earlier period NPAs are there, it is only on account of misuse by the leader 1, leader 2. That was the situation, we put an end to that. Unless you change at least once in 3 years leaders, we will not give a loan. That has brought a lot of improvement qualitatively, and management skills of governance has improved among the SSG members. The recovery, in fact, has, during COVID period, I tell you, my own experience, villagers, they themselves used to go and deposit into our bank account and handed over a counter file to my field staff, who gave official receipt from TAB. That was the commitment that, and the problem solving among the group, this 0.5% what we are giving incentive has got a catalytic agent which has worked very favorable to Sanghamitra, who retain them and work as a SSG. That is what we have done, and in fact this year particularly the growth has been tremendous, and we have been able to reach out to the unreached. There are even today, the Dharwad and other places, we recently started our office. To my surprise, even today, people have strong faith in SSG. Only in Old Mysore area, where the literacy level or microfinances institutions are more, there they don't depend on SSG. apna. I will do on my own. You need not. Okay, these are all the constraints, and what I agree with Salimatji, that the quality of SSGs of before 2000 is not the same today. That need to be nurtured. And one more problem, I raised this issue recently in NABAARD office also. The SSG nurturing program used to be supported by NABAARD, which has now come down. Now their focus is on JLG, more of JLG. Therefore, the SSG quality is also deteriorating. And another reason for qualitative, the bankers where they have opened accounts in banks, that is the basic requirement to have savings account. There, no bank is giving them loan for years together. Once there is no loan, there is no binding among the group. Group will get destroyed. These are all my views about SSG.
Thank you, Kadapnaji. We could have heard you more, but for the time constraint. There are many things we could have discussed, keeping the time that has been allotted. It is already 33 minutes we have consumed. So another 5-6 minutes I would like to devote for question and answer. There can be varied questions. So please address your question to the speaker, and then we'll have a question and answer session.
ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ ಸರ್. ನನ್ನ ಪ್ಯಾನಲ್ ಮೆಂಬರ್ಗೆ ಒಂದು ಪ್ರಶ್ನೆ ಏನಪ್ಪ ಅಂದರೆ, ಅದಕ್ಕಿಂತ ಮುಂಚಿತವಾಗಿ ಒಂದು ಸಂತೋಷದ ವಿಷಯನ ನಿಮ್ಗೆ ಹೇಳಬೇಕು ಅಂತ ಇಷ್ಟಪಡ್ತೀನಿ. ಐ ಆಮ್ ಕಮಿಂಗ್ ಫ್ರಮ್ BSS ಮೈಕ್ರೋಫೈನಾನ್ಸ್. ವಿ ಆರ್ ಸೆಲೆಬ್ರೇಟ್ 25th ಸಿಲ್ವರ್ ಜೂಬ್ಲಿ. 25 ವರ್ಷಗಳು ನಮ್ಮ ಸಂಸ್ಥೆ ಆರಂಭವಾಗಿದೆ. ಈಗ 8 ಸ್ಟೇಟಲ್ಲಿ ಕೆಲಸ ಮಾಡ್ತಾಯಿದ್ದೀವಿ. ಜೊತೆಗೆ 5,000 ಕೋಟಿ 5,000 crore AUM, 1 million ಬಾರಿಯರ್ನ ಕ್ರಾಸ್ ಮಾಡಿದ್ದೀವಿ. 99% ರಿಪೇಮೆಂಟ್ ರೇಟ್ ಕೂಡ ಇದೆ. ಆದರೆ ಒಂದು ಚಾಲೆಂಜು ಸರ್ ನಿಮಗೆ, ಸಾಲಿಮಠ್ ಸರ್ ಮತ್ತು ಆನಂದ್ ಸರ್ಗೆ, ಎಲ್ಲ ಕಡೆ ನಾವು ಸಕ್ಸೀಡ್ ಆಗಿದ್ದೀವಿ. ನಾನು NPA ಸ್ಟೇಟಸ್ ನೋಡ್ತಾ ಇದ್ದೆ. ಉಡುಪಿ ಕೋಸ್ಟಲ್ ಏರಿಯಾ ನಮಗೆ ಮೇಜರ್ ಡಿಫಿಕಲ್ಟ್ ಡ್ಯೂ ಟು BM ಬಟ್. ನಮ್ಮದು ಬಟ್ ಪೋರ್ಟ್ಫೋಲಿಯೋ ಅಂತಲೇ ಅದಕ್ಕೆ ಹೆಸರಿಕ್ಬಿಟ್ಟಿದ್ದೀವಿ. 32 crore. ನಮಗೆ ಅಲ್ಲಿಂದ ನಾವು ರಿಕವರಿ ಮಾಡಲಿಕ್ಕೆ ನಮಗೆ ಸ್ವಲ್ಪ ಪ್ರಾಬ್ಲಮ್ ಆಗ್ತಾಯಿದೆ. ಪದೇ ಅವರು ಮೆಂಬರ್ಗಳನ್ನ ಎತ್ಕೊಟ್ಟೋದು, ಪ್ರೊಟೆಸ್ಟ್ ಮಾಡೋದು. ಈ ರೀಸೆಂಟ್ ಡೇಸಲ್ಲೂ ಕೂಡ ಅವ್ರು ತಿರ್ಗಾ ಅಗೈನ್ ಮೈಕ್ರೋ ಫೈನಾನ್ಸ್ಗಾಗಿರ್ಬೋದು ಎಲ್ಲದಕ್ಕೂ ಪ್ರಾಬ್ಲಮ್ ಮಾಡ್ತಾಯಿದ್ದಾರೆ. ಆದ್ದರಿಂದ ಸಾಧನ್ ಅಥವಾ AKMI ಈ ಕಡೆಯಿಂದ ಏನಾದರೂ ಲೀಗಲ್ ಆ್ಯಕ್ಷನ್ ತೊಗೊಂಡ್ರೆ ಇವನ್ ನಮಗೂ ಕೂಡ ಎಲ್ಲ MFIಗೂ, ಎಲ್ಲ SHG, ಎಲ್ಲ JLGಗೂ ಕೂಡ ಹೆಲ್ಪ್ ಆಗುತ್ತೆ. ಅದ್ರ ನಿಟ್ಟಿನಲ್ಲಿ ಏನಾದರೂ ಮಾಡಲಿಕ್ಕೆ ಸಾಧ್ಯನಾ ಅನ್ನೋದು ನನ್ನದೊಂದು ಮೇನ್ ಪ್ರಶ್ನೆ ಸರ್. ಯಾಕಂದರೆ NPAಲ್ಲಿ ಟಾಪ್ 2ಅಲ್ಲಿ 5% NPA ಉಡುಪಿ ಇದರಲ್ಲೇ ಇದೆ. ನಾನು ಇದರಲ್ಲಿ ನೋಡ್ತಾ ಇದ್ದೆ PPTಲಿ. ಸರಿ, ನಾನು ಅದರಿಂದ ಏನಾದರೂ ಆ್ಯಕ್ಷನ್ ತೊಗೊಳ್ಬೋದಾ ಅನ್ನೋದು ನನ್ನ ಒಂದು ಮೇನ್ ಪ್ರಶ್ನೆ ಸರ್.
I'll answer this in English. First thing, I'll go back to what Shalimat sir said. At least only there is one BM but, not more than one BM but. If you look at, I'll just tell you we are in a unsecured loan business, so there will be ups and downs, right? And that is why we actually diversify business, and you have done it very well. I think it is part of the business cycle, and the cost has to be put into the as a credit cost. So I think that is one way in which we have to reconcile that. If you have to continue in this business for the long term, you have to do that, right? You have to put in. So that's how I see it, because I have been in this business for 12 years. You have seen ups and downs, right? that is one thing. In terms of the specific issue, I think it has definitely been a tough one. I was just talking to Hegde sir about the same thing, that this person is continuing to persist. We are doing because we go by legally what is possible we are doing. And because see, one of the things rules that I think we have all learned is we are regulated, we will go with the administration, go with the rules, right? If the other person is doing going against, we cannot again go against the rules. We will, we have spoken and spoken to the district administration, DC. We have had meetings. We have gone to the what do you say, customers also. I think we have to continue doing that, because I think ultimately, like COVID also, first COVID came, second COVID came, it ended. So this also will end, I'm sure. That's all I can say. Yeah.
So thank you, Anandji. Your question very difficult to answer. It is only but there.
Sir, what was the question, sir? I couldn't understand.
No. In coastal Karnataka, there is one lawyer who is discouraging people not to repay. Okay. So it is one individual, but we have seen similar instances happening in Maharashtra also. Yeah. So now what has happened is, the good part is, in many cases what we are saying, because there is no repayment, people withdraw staff. And now if they want to repay, there is nobody to collect. So some skeleton staff need to be given, and because of their name being in the credit bureau, they will also realize that their institutional mechanism to avail loan has stopped, but cannot help them in livelihood forever. At some point of time, they need fund, they will come back. So therefore, do not remove staff, keep skeleton staff, keep in touch with them. Now we have been recovering the loans which were lost, written off in demonetization period in Maharashtra now. So therefore, you should not be disappointed with that. This is going to happen. One more thing that may happen, we do not know. God forbid it shouldn't happen. Election is coming, assembly. People will make all kinds of promises. Assam has already set one precedent. I don't know whether it will be repeated or not. So we need to sensitize maybe AKMI and Sa-Dhan politicians about making false promises. Sensitization, we can't help them. Ultimately, they will always be after vote. They will promise anything on moon to get votes. But then at least some political leaders who are responsible, we should meet them, sensitize them that what is the importance of keeping economy. If India is growing because of economic growth only, if they come in the way of economic growth, all the aspiration that they are going to sell is not going to happen. This one challenge I hope both at AKMI at Karnataka level and Sa-Dhan, please sensitize MPs and especially those states who are going to election, don't make false promises, make realistic promises, and these are the things we don't do. So with this, thank you all the panelists and all of you for having a patient hearing. I have been closing this session within 40 minutes. Thank you.
Thank you very much, sir. Thank you very much, sir. So, as customs, we would be liking to give a token of appreciation to our esteemed speaker, and I would request Salimat sir to extend this felicitation from Mr. Kishore. Mr. Guardian Power. Thank you very much. Now I would request Mr. Gigi Moment to come on stage and extend that thing to appreciation to Salimat sir. Very interesting. Like I was I was standing there and I was trying to understand the sector of. Please. A photograph. Thank you, everyone. It was very interesting. I was standing there and trying to understand the sector of this Karnataka, and whoever, like, discussion was happening, and whoever is standing, they have been on board of Sa-Dhan. So it is a very happening state, like, and the contribution of contribution of the institutions to microfinance is immense. So my colleague, so I mean, in Sa-Dhan we are only 16, so we do lot of stuffs, and it is like always like multiple tasks. So here also I'm doing multiple tasking. So I was coordinating the session. I was like MC of the session, but in the next session I will be moderating the session. So it's also multiple tasking, but we love it. All of us in Sa-Dhan, from top to bottom, we love it, doing this multiple tasking. So if I can request Mr. Rajesh, DGM State Bank of India, please grace the panel. Mr. Mahesh, GM NABAARD. Sri Anil Kumar, COO SKDRDP. Sri Sridhar Iswaran, Head Samunnati Foundation. And Sri Krishnamurthy from Vritti. Please grace the panel. I have to bring my this. If I can stand here and do the moderation, would it be good for you people? Okay, it would be good. So it's also like I can see you people. Thank you everyone. And it's also very interesting state. You know, we are seeing the growth of SIG. We are seeing the growth of like FPO. FPO is like yet to be understood through data, but SIG we are seeing the data. We are seeing the data of growth also. We are seeing the data of like your data of NPA also. It's a mix of it. I would like to understand from esteemed panel that how is it working. Second thing, but I was also seeing that NRLM, SRLM, they have done wonderful work to have a MOU with this MISO. So that's also very interesting move. Where are we standing? So NPA is there, growth is there, these kind of things are there. Is it a like mix or is it progressing? Everything. In the FPO also we are seeing that like lot of initiatives are being taken. So here it is much more facilitative session, much more exploratory session, that how to understand from you that where are we standing, what are the challenges, and of course because it will culminate, all this discussion will culminate into a report for the sector, it would be good to know from you what would be the way forward. So I would first request request to the representative of SKDRDP that SKDRDP has a very nice growth. The growth is like being in for-profit, then doing SIG, then being BC, then doing so much of work. What are you seeing as this microfinance, SIG as BC model, the alignment in between, and also where lies the challenges and how How do you want to overcome that one? The suggestion has to be there. I request all of you people. Yeah, please.
First of all, I'd like to say thanks to Sa-Dhan, NABAARD and AKMI Association for this wonderful conclave. I would like to re-engineering your questions that, microfinance and BC, it is definitely a distinguished process or model or dimension. Because BC is extended channel of bank and within the framework, and we have succeeded, and this model is today nation benchmark. Microfinance is another dimensions or another bridge wherein BC could not do or bank could not reach, where that potential gap definitely can be facilitated through microfinance institutions. So the result and the developmental aspects, if you take to the end user or the ultimate clients, are another dimensions of institutional side, is totally different from microfinance sectors.
True.
Here the BC, if you take, the advantages for the bank is completely defined. Advantages of the institutions, corporate BC or BC, is also completely defined. The spread is defined, the delivery cost is defined. Within that only they can do. Here also in the benefit to the client also very much clearly defined. That's what today if you see the statistics of outstanding or lending, today we have outstanding of 17,000 crore. This 17,000 crore has reached to the people, our SHG members, at the overall cost of 12.25%. Okay, even though group is charging 14%, the spread between 14 and cost of fund to the group is also profit for the group. We have to do all these things within that framework. That is our efficiencies. Whereas in microfinance institutions, of course, cost of delivery is comparatively very high than our BC mechanism, because cost of fund also high, and also the delivery mechanism they have with a lot of challenges. Obviously it is high. Here average cost to the end user, either in the mode of retail or group, is something more than 24%. So that being the case, these two things are happening parallelly, of course, but results are different. And reaching, of course, sometimes multiplications are happening, cascading effect is there. But here I can say one thing, because all are our friends and we are running in the same, we are moving towards whatever the goals are different, but we are moving on same path. But challenges on BC segments are diluting day by day. Regulators are accepting, and legal frameworks are almost fitting to the existing process of BC mechanism. Here the microfinance institution sectors may face a lot of challenges in the futures. The very key factor is that, today we are saying that 100% financial inclusion is happened, which means bank accounts has reached to every citizen of the country. And fintechs are coming to reach these banking sectors to the ultimate poor, even remote village, without contact. So when fintechs are booming like anything, banks have already covered, they have database, and today is just simple product, digital loan is now reaching to a white collar people, or so-called we can call educated people. And it is not far away to reach the remote people. So that being the case, now cost of fund for the person is matters. Today if our generation XY is not calculating 1/4%, 0.5%, 1% rate of interest, the generation Z is helping X and Y and telling what cost of fund you are getting, what the market, everything. So this is one of the key factors and the key challenges for the microfinance institutions, wherein BC model has a lot of shield for these things. There is no differences. If banks able to reach the end users, whatever the mode, then the comparative study says that the cost of fund is 3 times higher than the bank fund. And the comparative study says that bank channel cost of fund and the BC cost of fund is almost equal or maybe 10% or 15% higher than that things. But comparing the services which is availed, people can definitely accommodate that cost. Yeah, thank you.
So do you also need to give this FLDG to the banks?
No, we don't give FLDGs, but
Okay.
we will take a undertaking that we ensure and we are responsible for 100% recovery.
Pardon? Okay, as of NPA. Thank you very much, Anil. Now I will go to Sridhar. So that's also very unique journey of Samunnati. From facilitator of FPO, then financing FPO. Now it's a big entity where we are seeing this agriculture financing and this FPO financing. So, I mean, I want to understand your model, and also I want to understand why this shift from FPO to this financing the FPOs and also lending to other institutions. A lot of microfinance institutions, they're looking at Samunnati's this investment. Yes. So I want to understand from you your model, and basically where are you seeing the contribution of these FPOs as like in the financial inclusion domain. We have seen MFIs are doing it, and this one when you are financing the male, like the male of the family, they may be having other loans as well. So is it really doing financial inclusion, or is it topping up the loan? Where are we standing?
Yeah,
very exploratory question.
Got it.
Yep.
Thanks, Sa-Dhan, for this wonderful session. Both the morning two panel discussions were very enriching. Samunnati, we are a non-banking finance company focused only in the agriculture value chain. So the moment, when we talk to the external world, we talk about Samunnati, non-banking finance company, agriculture, all of a sudden they connect us to a microfinance company. But we are not a microfinance company because we work in the entire value chain. So when we talk of a value chain, we work with a smallholder farmer and we go right up to a large institutional player who can be a processor or a buyer of commodities. So my ticket can be a 5,000 rupees, can go up to a 20 crore. So that is the range. One of the important asset class in the entire value chain is the farmer producer organization. Because the purpose of why the farmer producer organizations were promoted is to take care of the smallholder farmers. Because in India, 85% of the farmers are smallholder farmers with less than 2 hectares of land, and they are vulnerable, never able to make any money, right? Always at the mercy of money lenders, and that is a situation today. Now, if you look at why the FPOs got promoted, in the aggregation model, all these member farmers can come together and they are able to do their activities through the FPO. So they get the benefit of aggregation, collectivization, so that the cost of cultivation comes down, and they are also able to make little bit of money. That is the whole objective of why the FPOs are got promoted. And if you see the linkage between a SHG and the FPO, like how these FPOs got promoted, if you look at the SHG formation, right, the microfinance, here instead of calling it as an SHG, they call it as an FIG. They call it as farmer interest group, because a FPO working in a particular block covering 15 to 20 villages and can engage with anywhere between 1,000 to 2,000 farmers will not be possible for them to go and meet up with each and every individual farmer. So they took the microfinance model and they called it as a FIG, farmer interest group. Only difference is under the SHG you are very well connected to the credit linkages finance, whereas in the FIG, FPO, you get availed to lot of other services, be it for your seeds, inputs, other thing, also for the market connect when you want to sell, harvest and all this, right? Now, way Samunnati works is, we don't directly give credit linkages to the FPO, we understand the activities, what they do. That is what is important. The moment you give the money to and FPO does only two sets of activities, a input or an output. For doing both these activities, they need a working capital, right? No banks are able to give them working capital because FPO is a private limited company. The moment you call it as a private limited company, there are like the 3 years of audited balance sheet, all the legal compliance, governance comes into the picture, which the FPOs, because they are very nascent, right? So that's where Samunati will understand the activities of the FPO, and accordingly we give them working capital so that they are able to take care of the activities. Now coming back to extending credit linkages to the member farmers of the FPO is a good dimension. The reason being, if you look at the current state of Karnataka and if you see the statistics what was given, your state GDP for the agriculture sector is almost like close to 15%, and entire GDP agriculture sector contributes 19%. So there is a good track record which is available there. And also one of the statistics which was shown is 60% of the lending or the credit will be in the agriculture sector. So we are talking of 18,000 crores of credit linkages, almost 50-60% have gone only into the agriculture sector. So there is a huge synergy if you connect with an FPO, and FPO can also take care of the due diligence because they already know their member farmers. They know very clearly in terms of what transactions have they done. Tomorrow there is a huge opportunity for these FPOs to extend credit. So microfinance institutions can go and talk to the FPOs, and through the FPOs they can go and give it to the member farmers. And it cannot be a 5,000 or a 10,000 because the FPO has got a lot of information in terms of what are the total acreage he owns, what are the assets he owns, what are the crops he grows, what are the types of inputs, where he sells. So the entire financial information, the assets is available with the FPO. So it becomes easy for the microfinance to actually leverage that and start extending the credit linkages. So that's why I see there is a huge opportunity and there is a synergy wherein FPO and SHGs can come forward, and FPOs can do a much wider role in terms of giving credit linkages, not only credit, but also a lot of other services which the SHGs wants. Finally, I will just say, if you see today, all the SHG loans that has been given, might be the track record is not there. In terms of repayment, it is there. But what activities they use for the credit, nobody knows. So, but here we have the track record. We know what activities are going on. It can be for a dairy, it can be for any horticulture, it can be for any small processing unit. There is a huge opportunity for the microfinance also to get into entrepreneurship programs through the FPO, and they can do it. So that's what I will talk about.
Thank you very much, Mr. Sridhar. Now, very interesting. I will come to the lenders later on, but I would like to understand from you, Mr. Krishnamurthy, about Vrutti's model. So, when we talk about FPO, we generally hear that, okay, it is all about 3 years. They will be working with this FPO for 3 years, then NABAARD's or other money is gone, then they will withdraw. The poppies will withdraw because they don't have money. I don't blame them. They don't have money to work with them and they withdraw. And these FPOs, they are gradually going to erase. So the things are not happening, all these things, it gets squashed. So Vrutti, as we could understand from Sa-Dhan, that you do have unique model of developing sustainable FPOs. How are you doing it? What role, I mean, towards the end, after 3 years, what kind of role do you have? And also, what's your basic model of doing it? What are the challenges also, I would like to understand, in your model?
At the outset, I would like to thank Sa-Dhan and AKMI for having us here. Vrutti is about 20 years old, and we work with about 32 FPOs in about 9 states with about 47,000 farmers. Apart from farmers, we work with fish vending women, MSMEs, sex workers, and all these people. And coming to your point is what is the model? We have a model, a standing flagship model called threefold, where we ensure, the income of the farmer is increased 3 times by making them wealthy, resilient, and responsible. So with this particular program, what we do is, it is not a project based where we are in a location for 3 years or so until the project is, and then we also move out, which we don't do it. We are there with the FPO on a long-term basis. How we manage is, we get some projects or some funding from a CSR funds, and we implement these programs in that particular location and help the FPO also grow there in various things. One is by giving the farmers the various training sessions and various other things. Other than that, we also look at how the revenue can be generated for the FPO. what we have understood is, we have understood there are two major factors which is important and which makes the FPO sustainable is, one is the marketing. Okay, so for marketing, what we have done is we are trying to understand what are the produce that the farmers have at the different FPO levels, if we can aggregate them and how we link them up to the market, for which we have a dedicated team which is now looking at and setting up the entire value chain right from the inputs to the output. So the entire thing, including selling it as a raw product, or wherever possible, if you could do some value add by adding some processing the meat thing. And the other thing that we are doing is also the finance, which is also a very big has a big role to play in making the FPO sustainable. For which what we are doing is we are looking at partnering with various financial institutions as a BC, and we have already been doing it in few locations with the KCC program and Karnataka through Canara Bank. We have approached quite a few other financial institutions also in giving the individual loans for the members of the FPOs, and at the same time, we are also working and facilitating the working capital loans for the FPOs. In procuring produce from the farmer, or setting up a processing unit, or setting up some kind of a small FPO level enterprises. Like in one location in Kurnool, we have set up about 6 FPO level enterprises for goat and sheep rearing. Like in Gulbarga, we have a tur dal kind of an activity. So we have the entire value chain that is there, and the income is generated from that, and which makes the FPO sustainable.
So there are some issues of these FPOs, like their governance and their other things. How do you deal to make it sustainable?
Yeah, see, what we basically do is today, if an FPO directly approaches a financial institution, like Mr. Sridhar said, they might not be eligible for the loan. So what at Vruti we have done is we have developed a model where we do a credit assessment of the FPO. Right from governance, statutory, financial, compliance, we go and we do an assessment for and credit worthiness. So we do the entire assessment of an FPO, and we suggest them that which are the areas that they can improve, how do they improve. Not just suggest which areas they improve, we also help them in building their credit worthiness, building their books, and regularizing all those things that is required for an FPO, and ensure they are credit worthy, where either we can help them in getting the finance, or if they can walk into the bank on their own with their documents, they should be able to get the loan. So that is something that we are working in, and we have already started doing this work for credit assessments, for worthiness assessments for the FPOs across.
Okay, thank you. I'm saying you want to tell something, add on something.
Only 30 seconds.
Yeah, please.
See, when we talk of the lending to the FPO, it will be very tough. Because the share capital what they have is very, very less. They only collect 500 rupees or 1,000 rupees. However, if you really wanted to do a credit assessment, you have to look at in terms of the overall how they are connected with their member farmers, and if they are going to do an activity, how they are connected with the external stakeholders, be it the input manufacturer, supplier, or in the case of an harvest, as he said, who are they selling, who is the institutional buyer or the processor. So if you have the clear visibility, then any bank can take a smaller exposure. You don't have to give them 50 lakh rupees. You start with a 3 lakh, 5 lakh rupees for a small activity, one crop cycle, try and test it for 2-3 crop cycles. Slowly you increase the limit from 5 lakh to 15 lakh. The way Sammunati has worked with so many FPOs, where I myself have given a 5 lakh rupees, now today that FPO has got a 50 lakh limit, and the turnover of the FPO is from 20 lakh, it has gone up to 5 crore rupees. So that's how you be part of the journey with the FPO. Don't look at them as a transaction, look at them as a relationship, then only it will work.
True. Thank you very much. So the relationship building is the epicenter of everything, like in our microfinance, the SAG model, microfinance model, the relationship, what it works.
Handholding and mentoring.
Yes, otherwise, we don't have anything to hold them back to repay. So it's non-collateral everything. So yeah, relationship is one of the things which we really work on, and we are happy that microfinance and other sectors are growing. Financial inclusion sector is growing. So now I will go to Mr. Rajesh. to understand from you the lender's perspective, especially in the space of financial inclusion, which includes your SAGs, support to SAGs, support to FPOs. If possible, you can talk about microfinance segment as well. It's not mandatory. We brought you for this two segment basically, much more community oriented. So if you can help us to understand the perspective of SBI. Thank you.
Am I audible? Yes.
Yes, please.
Yeah. First of all, I want to thank everyone, especially Sa-Dhan, NABAARD and AKMI, to allow us to hear this forum to speak something. So, as my topic is today self-help group and FPO, I just want to tell that we as a State Bank of India, we are working in all the areas, be it self-help group, be it FPO, be it microfinance, everywhere we are here. And I don't know the data they were discussing, 24,000 crore. It is the lending by the MFI in the Karnataka state or something else? It is a lending by the MFI, outstanding. So in this case, I just want to add that our outstanding as of today is 5,000 crore. It includes self-help group also, direct lending, indirect lending. It includes to financing to MFI, including all. As of today, we are in Karnataka state. We are having an outstanding of 5,000 crore, and if we take care of the total agriculture finance of the State Bank of India in Karnataka, it is about 16,000 crore. So if we take 30%, it means approximately 30% is for microfinance or for self-help group, or for, we can say, for the smaller type of the people who are not able to get the finance from anywhere. So in this way, I must say that SBI is doing the good work for ensuring that finance should reach to the last stone of the eligible customer. So that was the one point. And second thing is that we were doing the self-help group, but as Mr. Anil has told that it is very difficult for the banks to finance directly to the self-help group. I agree with him, because there are so many things are there. If any microfinance institutions or BC is helping the self-help groups in nurturing them, in taking care of them, in recovery, in guiding them, everything is there. And for that, I must appreciate SKDRDP, that they are doing the wonderful job in the self-help group. And last year, I think, we have started the working, though we were working with the SKDRDP for so many years. But last year was the exception year for us. We have done, I think, approximately 2,000 crore of sanctions in 2021-22, whereas we have given disbursement of approximately, I think, 800 crore during the last year, and it's still going on. And the BC model, what they have adopted, I think it is the best model as per my view for financing of the self-help group, because they are taking care of everything. They are taking care of everything, and as far as rate of interest to the final self-help group, charging by the bank, including the cost of the SKDRDP, it is rather much lesser than the MFI. So one person was discussing about the rate of interest in that we are charging that, I think sir was talking, that MFI is charging the higher rate of interest. So maybe the costs are high or something else is there, but in any case, in BC model, there is the very lesser cost, 12.25% is the very reasonable cost. So I think this model we should adopt. Other people may also adopt this model, or we don't as a banker have any issue with the BC model or the MFI model. We are with everyone. We are in the co-lending, we are in the pool purchase, we are in the term lending, everywhere is there. But in MFI, a little bit somewhere here and there is there. If we going for the pool purchase, sometimes there is NPA issues there. So in that little bit NPA issues there, if NPA is there, so it's a direct loss to the bank for that. Whereas in BC model, they are taking care of the NPAs. 100% they are saying that it's our guarantee that there should not be any NPA. And I think if the BC is having the team, strong team, and they are following it up with the self-help group, they are guiding the self-help group, it's definitely there is no NPA in the self-help group. If the money given by the bank or by the BC or anything, if it is reaches to the right hand, number one, and if they are using that money for the right purpose, for what purpose they have taken the money. Second thing, recovery, one of the gentlemen was discussing about the recovery, that one person is going to the recover the money, and then it is going to the bank, and sometimes he is not depositing the money into the bank. But here again, one system is there which they are adopting, and I think everybody should adopt that. That system is the person who is going to collect the money from the self-help group, they are carrying a POS machine with them. They are carrying the POS machine with them. At that time only they have issued the cards to them. Already BC have issued the card to the self-help group members. While recovering the money, they are swiping the card. They are giving the receipt to them and receiving the money. What the POS will give? POS will give the MIS to the BC that much money I have recovered today. And so, and the same money he is going to deposit into the bank. So there is no misappropriation of the money by the collecting agent. So this is the thing which we as a banker like the most, because that is one of the reasons that recovery percentage is 100% in case of SKD-RDP cases. 1 or 2 cases maybe they are because of due to death or anything else, and that too is covered by the insurance. So for others also we are here in the for the self-help group. We are giving the direct self-help group lending also, but on a lower scale, because it's not possible for the bank to visit time and again to the self-help group members in the villages. Because if nobody is there to nurturing them, to guiding them at a different level on a regular basis, so money will go into the wrong hands, or they may misutilize the money. So that's why somebody is needed to us, and we are here to finance for further financing to the self-help groups. And further as a FPO, as Mr. Sridhar has told, and all persons have told that it's a new concept for us. It's a new concept, though it's not a new concept, I must say. Some of we have visited the villages and find out that some of the farmers and some of the FPOs are already working there without any help, but at a lower level. Because of the shortage of funds, they are not able to do the processing of the farm goods, farm produce. Because in my view, if FPO is not doing the processing, it's not good for the total group, because they may not be able to get the higher price of the goods. And at the time of harvesting of the crop, if FPO is selling at the same time in the market, so naturally they will not get the higher price which they expect, and which members are expecting, that if they are the member of the FPO should benefit to them in one way or the other way in increasing their income. And one of the way of increasing the income of the members in FPO is to sell the goods, to sell the farm produced at a higher rate. Though some of the FPOs are doing marketing very well, they are connecting with some of the online companies also, they are connecting with the good wholesalers. They are having their system of selling the goods, that if one person is going, one farmer is directly going to sell to them, it is routed through again through the FPO only. They suppose if Reliance is there and FPO is having the contact with the Reliance, and any member, if they are going to sell the produce as a member of the FPO, they will get the same price the FPO has decided with the Reliance. So little bit there is things are there, but again the capital is needed for that to the FPO, and the FPO should process the things. And for that, I think now SBI has started the lending for the FPO at a great level, and we are with the support of the NABAARD and other institutions. So we have now taking a project. At present, a project is going on, agri value chain financing. In that, we have started financing. We have financed some of the FPOs in the Karnataka recently, during the last month only. I am hopeful that our result will be in positive way. So we'll be financing more and more FPOs in that case. But one thing is that in the last month we have financed. In that case, we have financed the entire value chain. From input supplier, we have financed to the input supplier also. We have financed to the FPO also. We have financed to the farmer also, and we have financed to the ultimate purchaser of the final product. But at present, these FPOs are not processing. So here I would request to the Sa-Dhan that they can talk to the governments, different governments, to provide them some of the infrastructure to the FPOs. If they are able to provide, the government is providing, suppose warehouses there with the government. They can provide the warehouse facilities to the FPOs to take care, to stock their produce so that they can sell at a later date at a higher price, like cold storage. And if FPO is building their own cold storage or there's something, there's some concession, some subsidy and something, some type of the help must be there for the FPOs. If that is happening, I think it will be a new concept. It will be going to a big way. It will be, I think, more than self-help group. It will work like that, because as I already told, 80-85% of the farmers are small farmers, and they are always in distress because they are not able to sell their produce in time. They are not able to get the inputs at a competitive price. They are not able to get the you can say farm machinery, because if FPO is there, they can give the farm machinery also on rental basis to use and give back to the FPO. So all these things are there. I think we are here for that. Any support, any type of things are there, and I will request all the MFIs here. If they want any support from the SBI, I am here. You can note down my number, and our LHO is there. We'll try to support all the MFIs, all the with Sanmuti also. We are already in the MOU. So
you will be getting the couple of institutions are there in India. One significant institution is NABAARD. Even in microfinance segment, they were the largest funder. So it is like a very, I mean, it is honor for us that we work very closely with NABAARD, and NABAARD has been extremely kind to us, to helping us for different activities. Sa-Dhan being a society, we raise fund to organize the events and also run our organization. NABAARD has been extremely supportive. Even for this one also, NABAARD is our sponsor. Thank you. But as a speaker, Mr. Mahesh, I mean, in the first panel, a lot of this SHG stuff has been already talked about. So I don't want to get into that one. I want to understand from you that what kind of support mechanism is there in NABAARD in the space of SHG, now not that much in SHG. Apart from that, what are the spaces, what are the areas, what are the schemes you do have where these the players of microfinance, the retail level players of microfinance, the MFIs can access and develop this, take forward our financial inclusion agenda?
See, ever since NRLM came into existence, NABAARD support for formation nurturing, Mr. Gadinapanavar was telling about, we have stopped supporting formation of SHGs because NRLM has taken over, so we have not focusing on that part. But ultimately, promotion nurturing cannot stop at a level. We need to actually graduate them into enterprises. That's where the sustainability part comes into play. So our focus after NRLM came into existence was to provide skill trainings, LEDPs, we call it livelihood and enterprise development programs, micro enterprise development programs, addressing the needs of the SHGs. So that has been one of our major part, which we have been supporting the groups. Subsequently, we also moved into the JLG promotion. Even today, SHG we are not promoting, but we are promoting JLGs largely the country, and we are working tied up with several banks. Even in Karnataka, we have tied up with ICICI Bank. I think we are tying up with HDFC Bank. We have with Canara Bank. So we are tying up with various banks for JLG promotion. Then, in addition, financial inclusion. See, we are not talking. This is a conclave on financial inclusion. We are not talking only about SHGs and credit. So, as a financial inclusion initiative, what we have been doing is supporting the rural cooperative banks and the RRBs in the state to have them almost, if not on the equal footing, almost running just behind the commercial banks in digitizing, in giving the latest financial technologies for the consumers in the rural areas by providing them mobile vans, micro ATMs, POS machines, onboarding them onto BHIM, UPI, Bharat payment system. All those provisions we are helping out the cooperative banks and RRBs in the rural areas. Finally, if you look at what we have to offer for MFIs, today we have only one thing which can be offered is a refinance, which we provide to banks, we can provide to the microfinance institutions, because we had MFDEF, Microfinance Development Equity Fund, which we had earlier, where we used to provide quasi-equity or even subordinate debts to those times upcoming MFIs. Today we have only product is refinance. Currently refinance is given to MFIs if I compare NBFCs and MFIs, NBFCs is still at very difficult situation because the rating which we expect from NBFCs is quite high. But for MFIs, all MFIs which have got a grading which is one notch below top notch, like MF2 or M2, they can be funded by NABAARD. So refinance is provided to them. The refinance, for getting refinance from NABAARD, you need to fulfill some 5-6 eligibility criteria. First thing is you should be registered as a RBI, NBFC MFI under Section 45(1)(a) of RBI Act. You should be at least in the business of lending for the last 5 years. These are all for MFIs, which are registered as MFIs, are not NGO MFIs, who are not registered as a NBFC MFI. You should have net profit for the last 3 out of 4 years. This is one of the criteria. CRAR minimum 15%. Then you should have, out of the 4 years, you should have 3 years profit. And in that, for the current year, suppose 2023 we are talking about, the first 3 months, because your audited statements will not be available, we can go back to the previous year's financial statements. But if you, after June, any support we require from NABAARD, it has to be based on the audited report of 21-22. So that's what we will provide. And you should have a MOA clause, it's generally available, clause which allows you to borrow from higher financing agencies. So if you fulfill these criteria, and we have internal rating norm, you should fulfill the rating norm in addition to what you get external rating. So once you fulfill this, you get a refinance from NABAARD. And currently, SHG and MFI sector is thrust area for NABAARD. So we provide 95% of the amount which you lend as a refinance. Suppose you lend 100 rupees, we give you 95 rupees. That's how it is. So that is a NBFC MFI is a provision which we are given. Currently, last year if you look at, while SHG BLP we had given about 10,000 crores. For NBFC MFI we have given 16,000 crores of refinance across country. So pardon? Cost would vary. It's a dynamic because depending on our borrowing, risk cost and all those things. Currently it's been anywhere between 10.5 to 11%. That's the, pardon? One notch below. One notch below the top rating. Grading. We are not looking at rating. Grading. If you are MFR2, M2, that is fine for us. So that's why many NBFCs are not eligible, but MFIs are eligible. Because in the case of NBFCs, it's almost A+, so which many of them may not qualify also. So this is currently our policy. Like I said, against 10,000 crore for SHG BLP, we have given 16,000 crore for NBFCs. And we were also implementing SLF. Even for the smaller MFIs, we have given 2 years back. So during COVID, in fact, we have stepped up our lending to ensure that the ultimate beneficiary is not affected by non-availability of credit. That is from NABAARD directly. In addition, NABAARD has got 3 subsidiaries. NAPFINS is here, NAP Kisan, where I was CFO earlier, then NAP Samruddhi. So all the 3 subsidiaries also fund MFIs. So at least I know last 5 years I was with NAP Kisan, we have funded more than 55 MFIs. IDF is one of them. Credit access, not in credit access form, but we have funded Madura Microfinance, which is a part of credit access. Chaitanya we have funded here. We have funded IFL, Samastha also. So all the major players, NAP Kisan has been funding, NAP Samruddhi has been funding. NAP Fins also has the non-qualifying portfolio, they have been funding MFIs. So in addition to NABAARD giving to the top-notch MFIs, the subsidiaries are also being asked to step up funding to MFI so that credit requirement of the beneficiaries, SHG members, are not deprived. I'll just add 1 or 2 points on the FPU because I also happen to be the CFO of NAP Kisan, where we are one of the largest financiers of FPOs. One point which Mr. Sridhar was telling, the difference between the SHG and FPO. See, the basic building block in many of the FPOs is today FIG. There is no savings linking in there. The Panchasutra of SHG is not there in that in the FPOs. But there are several FPOs which are formed out of SHGs. Resource institutions, suppose you take Sa-Dhan Foundation, for example. They are basically into SHG program. So all the FPOs promoted are from SHGs. So what is happening is, they have a credit culture. Now you are forming an FPO, which is an FIG, which comes into play as a business entity. We are not taking SHG. Originally, it was not started as a business entity. It is like something mutual support, correct? Now they have to graduate into business entity. FIGs are purely focusing on business, whereas these FPOs, if you are building it from SHGs, that credit culture will always be there. Second important point, which is missing in today's straightaway formed FPOs, is the cohesion. Social cohesion is not there in many of the FPOs. You have 1,000 members. The average size of most of the FPOs in the country is 500 plus. So 500 members coming, many people do not know both of us are member of the same FPO. Whereas if it is from the SHG, you have SHG federations, which have become FPOs. So that cohesion is one of the biggest advantages we have. In Karnataka, I remember, at least there are 5 FPOs promoted by Dan Foundation, which are basically the Kalanjiams. They are FPOs. We have one Gurumatkal in North Karnataka, Swavalambi in Tumkur. So many people, so many FPOs are there, which are largely women-driven FPOs. And there is one Ram Rahim FPO in Madhya Pradesh. All tribal women, 3,000 members are there, doing excellent business. Today we have a lot of FPOs having turnover of 5 crores, 10 crores and above. As he said, it's only that initial 5 lakhs, 3 lakhs, which will trigger them to grow in size. Because today we are talking about SHGs. The average loan disbursed in Karnataka for SHG is 2.43 lakhs under the SHG BLP, not under the MFI. That translates 20,000 rupees per member. But if the same requirement for a minimum FPO, the minimum requirement for a 500 member is 1.25 crores. That's the only on the input-output part. If you really grow, the sky is the limit. So FPOs, today we have 16,000 FPOs in the country, registered FPOs. Average of 500 members, we are talking about something around 1 crore farming families. Tremendous growth for that.
If I can add only 10 seconds.
Yeah, please do.
Going through the SHG, as the NGOs are, they already done a lot of capacity and institutional work there. So the time to market to promote those FPOs is much faster. So that's what all I wanted to say. If you go through the SHG route, you can really kickstart the FPO operations, and it can become really financially viable at a shorter span of time.
Background work
is already done. The capacity work is already
true. Thank you very much. So we are already late, but still I would like to get questions from our participants if you have any questions. Anybody? Yeah. So Karthik here and there.
This is Banu Prakash from Swaman Financial Services. This is for Mr. Krishnamurthy and Mr. Ishwaran. So it's a very, it's a unique and it's a very interesting. I'm believing this model would be a game changer to improvise the rural economy in the country. But I'm taking cue from microfinance experience. When it is all linkage to all our financial services and catering the financial services through FUOs, it is related to agriculture. But in the country, very often we are getting threat from way of the agricultural loans from the so many governments and other entities. So what kind of implications that we are looking in this context when we are catering services to agricultural based services?
When it comes to Samunati, when we interact with them, the first point what we tell them is we are a private bank, NBFC, so the loan waiver and all is not applicable to us. So that is made very clear to them. And going forward, if you see, FPO is going to be an important asset class. This last financial year, 10,000 plus CBBOs are going to be there, and it's going to grow only, right? And I will not be able to talk about the loan waivers of the government and all, but the way things are going in the economy, those all things will stop over a period of time.
Do you expecting any legal framework that we need to strengthen in this context?
Legal frameworks are already there, right?
Already there.
It's already there.
It's already there. Yeah. So that side, Karthik. working.
My question is to Anil Kumarji. I am from IDF Financial Services. Anil Kumarji, you said that under BC model you are absorbing the NPAs. So in that case, these NPAs accounts are regular in the books of the bank. But what about in the CIBIL? They appear regular.
Actually, the mechanism of the BC model which we are having at the bank is financing to group. So there is no mechanism in India to have a rate for group. CIBIL is for individual. If you see the CIBIL or any other ratings, their individual borrowings patterns will comes. If they are financial or if they are guarantor to somebody will come. But having a liability in the group, nowhere it can be officially documented in rating. So that being the case, there is no option in the system, and there is no natural need in the system to attach group liability for members, because it cannot be. Scientifically it cannot be, because group exposure, if it is 5 lakhs, the member exposure may be 50,000. But how this group exposure can be linked to members? If one member is closed, this is his liability. How it can be delinked from the group liability? It's a totally technical issues. That being the case, as of now, even Ministry of Finance has thought of it, whether group rating can be implemented in India. But as of now, there is no such mechanism. There is no questions of rating impact on members in this segment.
So if I can answer your question, in this universal format of Credit Information Bureau, there is a space called adjusted, the account. Banks need to do that one. Banks do not do.
So
there
but
lies
in the
the
books
problem.
of banks, the account appear regular.
Yeah, and the banks there, but bank understands that this account has been adjusted. Still, they do not upload that one as adjusted. So there is a gap.
If some other MFI or some other lender uploads the CB data, they end up financing the delinquent accounts.
I will clarify here.
True, very true. Yes, it's a risk.
See, but what happened in our cases, there are 10 members in a group. Out of 10, only 2 are, because of various factors, they are defaulters. Their repayment definitely affect to the group. So we purchase that portfolio from the bank, that group liabilities, and we keep that liability in our books. We try to recover from those default 2 members. We have some stipulated time. If nothing is work out, we slowly shift these 8 good people and either forming a new groups or migrating to a well performing group, so that we will keep all these 8 members, they are good in the track itself, and we will just terminate those 2 members from the system. Yeah.
But you will be paying out of your own money.
Yeah, we are purchasing. We are purchasing, and that is the golden line of our MOU with the banks.
Sir, I am Nagendra Male from Navchetna. I don't have a question, but I just wanted to add to what Gupta sir from SBI said. So they have got one more very unique program which has been launched about a year back. It's called co-lending. Under the co-lending model, Navchetna is also a partner, and we have disbursed close to about 20 crores. So here we are really amazed to work with SBI, because the cost of funding to the end borrower is coming very drastically down, because State Bank of India is charging around 16% on their 20%, on their 80% of the loan, and we are charging whatever is allowed by Reserve Bank. So with that, the average weighted interest rate to the customer is coming to around 17 plus, between 17 to 18%. That is one thing. That is one very important feature of this co-lending product. Second important thing about this is it's completely technology driven. In spite of being State Bank of India with such a big network, end to end it is fully automated, no human intervention. So if everything is okay, the customer can get the money into their account in flat 10 minutes. And also it is a paperless loan disbursement. So this is what I just wanted to add to you, sir. Thank you, sir. Yeah, we have been having very good relationship with SBI. I would like to mention that also.
Thank you very much. So I will be closing the floor for question with this question. So two, three things which we could understand. First of all, the capacity building, the skills, then your hand holding, then your financing, the whole value chain possibly will help us to grow our portfolio and help them on the ground. And I think the most important thing, I mean, what we do believe from the association, we have to have a very good relationship with your funders, donors, and supporters. If you are having problem, please do escalate that one with them. They will also understand. They will go to the field. They will understand that yes, there is a genuine problem. So the relationship building once again is very, very much important in this segment. So thank you very much, my esteemed. You want to add something? Okay, please. Working.
This is a general thing, since we all are like-minded people, since a very key factor has come, false promise or intended promise to debt waiver. Shall we think of put a proposal in the National Conclave, which is scheduled on 14th?
And 15th, yes.
From all the microfinance institutions level, from our level, I request estimate banks level to approach or request Indian election commissions to bar this any statement promised from the political party on debt waiver. We are the only people can request election committee, because we are the people going to affect out of this. And it is nowhere good for any country's economy. We can definitely justify why this promise should not be from any political parties. And definitely election commissions may take bold decisions in this segment.
Thank you very much.
If all institutions from our end, through Sa-Dhan, if we...
Or the election commission to exempt this kind of announcement by the politicians. That will carry more weight than the institution like us going in. No, we should make a move. Yeah, we can pass a resolution.
Okay, that's one of the takeaways of from this. From the industry body, we need to write to election commission that this kind of false promise should not be made.
We will discuss in national forum.
Even IPL we can file.
Pardon?
We can file an IPL. Yeah.
Okay. Yeah. So we will work together.
PLI.
So
PIL. Sorry, not IPL.
So we will do that one. So thank you very much. I thought that we are this segment is in between lunch and in between this thing, but the discussion was really lively and a lot of questions are there. Thank you everyone, the participants also, for the questions, and thank you my panelists. I really appreciate your contribution for this one. Now I have to do a appreciation to you, Kartik, if you can. Then I can.
Thank you everyone. Thank you panelists for your insightful discussions. As Professor Sriram said, SHG bank linkage, SHGs play a very important role in inclusive finance, and now FPOs have taken a lot of. Dr. K.S. Mahesh, GM NABAARD. Shri Anil Kumar, COO SKDRDP. Thank you, sir. Thanks for your participation. Shri Sridhar Iswaran, Head Samunnati Foundation. Thank you, sir. Thanks for your participation. Shri Krishnamurthy, Senior Manager Vritti. Thank you, sir. Thanks for your participation. Now I request.
Or it's okay. I'm from Sa-Dhan. It's fine. Thank you very much. Please round of applause for this. So now I'd request Mr. Divakar Hegde, MD NABFINS, to give the valedictory address. Sir, over to you. Please do come.
Okay. Good afternoon. Namaskara. So we are coming to the almost end of the program. So since morning, I think for last 4 hours, we have discussed about microfinance and its performance, its future, and what are the opportunities in the state of Karnataka. So I feel microfinance, MFI sector or microfinance sector in the country is a very, what should I say, matured industry. Last more than 2.5 decades history is there for this industry. And there are 2 SROs who are taking care of the interest of the industry. And there is a regulatory supervisory control is there. And there is a code of conduct for the industry. FPC is there. I think hardly others, I think industries don't get all these things, which makes what is the impact of all these things is the customer, the borrower's interests are always protected. So that is a very important thing. End of the day, customer is the king, and his interests are protected, and well, all these structures are kept in place. And the industry is also resilient. We should appreciate that. It has taken the onslaughts of like Andhra crisis or the demonetization, which was a demon, whatever you call. Politically may not be correct. So, and Assam crisis, and of course the COVID crisis, which could, I mean, it could withstand all these onslaughts, and like a phoenix came out with what should I say, flying colors. So I think as a industry partners in the state of Karnataka, we have been doing a wonderful job. Our portfolios are very healthy, showing the healthy color. And ultimately what is the goal of the microfinance? In my view, the goal is the empowerment of the low income group who are not directly getting the support from the banking sector. So their empowerment and women empowerment, mostly the women are out of the banking, financial inclusion. So that is the goal of our microfinance institutions, microfinance approach. And world over, I think that's what we are aiming at, and we have been largely successful in achieving this kind of course, goal cannot be achieved in a day or two. It will take decades, it will take maybe half a century. So we are moving in that right direction. I think these are kind of interactions within ourselves will help us to identify where we stand, what are our strengths and what are the weaknesses, what kind of challenges we are going to face. I think it has brought out in the 3 panels we had. So those discussions are really very enriching for all of us. We could identify certain issues. I'm sure that will help us when you go back to our respective companies with respective areas to address this issue in a very more constructive way, and maybe get a common view on some of the issues we face. The supervisory control, the regulators have created a level playing field, which has also maybe created some sort of, I said earlier also, initial borrower uploading cost has gone up. So, but that is all temporary things. The technological interventions, innovations are happening, which will definitely help us to bring down the risk and bring down the operating cost. So there are problems, there are solutions, and these kind of deliberations, Chintan is always really very useful, helpful. I thank Sa-Dhan for taking this kind of a noble initiative of conducting state level Chintans, because end of the day the issues will be different for each state. So on behalf of you, all of you, the entire MFI sector, I congratulate the Sa-Dhan. Of course, Sa-Dhan MD is again, ED is again former NAFIN's MD. So the learning from the field is also there. So that is very good thing for a SRO, I think. So I think we had a great discussion. Definitely, I am really enriched from this discussion. Thank you very much for this opportunity.
Thank you, Mr. Hegde. So, Mr. Hegde is not only MD NABFINS, he is also our board member. Round of applause for him. So, I would request now Mr. Gigi Maman, CEO and ED of Sa-Dhan, for summing up and way forward. Thank you very much.
Thank you, Saibal, and I will not take much time because we are almost at the fag end of the program. In fact, let me thank each one of you for being here and spending about half a day very productively, very fruitfully. In fact, I should thank the panel members and the moderators who led the panel's discussion in bringing out quite a good number of suggestions and recommendations from this deliberations. Really, we are enriched, as Dr. Hegde said, through the deliberations of this one. In fact, today, if you just see the proceedings, we had 3 sessions, 3 panel discussions. First one was about reflections and perspective of the financial inclusion in the state of Karnataka. Followed by, we had a presentation by my colleague Karthik about the financial inclusion status of the state, how it stands. Followed by second panel discussion moderated by Mr. Salimatji. First one was moderated by Professor Sriram, second one was moderated by Salimatji, and where we discussed about the microfinance sector and its contribution and opportunities and challenges. And third one was on the panel discussion moderated by Dr. Saibal, my colleague. And it was about SHG and FPOs building up convergence and to promote better inclusive finance in the state of Karnataka. I'll just run through some of the important points which I have jotted down. Maybe I have missed a couple of points, but then some of the points which I have just jotted down, I will just like to bring it to the the information of the members here. In the first panel, Mr. Sudhir Madhavan had made a point that there is a basically the microfinance is a human intensive model. It's a high touch activity, and technology cannot replace it entirely. It has to be always a phygital model, physical touch, as well as the technological improvement should be there. Number 2, what he said is that as an SFV, he has been able to make some kind of a graduation in the loan product of the MFI members. In fact, what they said is that they were able to find good customers from the MFI sector who had been having business with them. So, and they were able to be graduated to higher loans, and they were able to get a better repayment and better performance from these members. Mr. Sahu brought out a point about, although we think that financial inclusion in a state like Karnataka, it's quite well saturated. Everywhere MFIs are there, everywhere bank branches are there. But the reality is that when you go into the deep into the rural areas, we still find a large number of people who still do not have a bank account or should not have a credit account with the bank. So this is not a completed task. It is an ongoing task, and it will continue. Mr. Mahesh from GM from NABAARD, he brought out how SHG evolved. He beautifully brought it into 3 phases, how that SHG in 3 phases, how it evolved into a present level. He also talked about how a synergy exists between the bank and the MFI for the improvement of the sector in the state. Mr. Bishwas, AGM from RBI, he talked about the policy level initiatives of the RBI. Especially, he talked about one particular point about the financial inclusion index which RBI has brought out. And there has been some marginal improvement as far as financial inclusion index score is concerned. From 51 to 56 points, it has increased in the last year. Probably what I understand is that this kind of a financial inclusion index score would be there for different states also, going forward, and maybe the district. So then you will be able to have a better understanding about where does our various geographies stand. Sriram finally summed up the whole thing. He was talking about how it is difficult to have the residual growth is how difficult it is. Initially, probably the growth could be quite substantial, but then going forward, residual growth would become little difficult. He talked about how SHGs have broken all the multiple paradigms, and also he's talked about how microfinance is having a changing paradigms of, in various services. Then coming to the second part of the panel discussion, Mr. Kishore talked about providing a holistic financial service to the borrowers. Financial inclusion is not just giving credit or not just giving the banking services facility, but it's a holistic development, holistic financial service products which we should look at. Mr. Anand Rao from Chaitanya talked about the technology and high touch requirement. Although technology is required to reduce the cost, but high touch is still required for the sector. Dr. Hegde from NABFINS talked about the need for innovation in microfinance sector, and also he also made a suggestion about rationalization of interest rates by bringing in better technology and better processes. Mr. Kumar from IAFL Samastha talked about the need for improving the efficiency through technology, especially eKYC, e-sign, etc. Gadia Penawar has talked about the need for having similar kind of state-level interactions on a regular basis. He also talked about the need to keep the quality of the SHGs. In fact, he very well explained how the SHGs have declined or deteriorated over a period of time compared to the 2010 and subsequent to the period. Probably there has been a deterioration, especially after the pandemic. The group structure itself got little bit disrupted, but then things needs to be brought back. And he talked about the need for better bookkeeping requirement as well as rotation of leadership in the SHGs to make them vibrant. Then of course the panel 3. I'm sorry, Mr. Anil, I missed your interactions, but of course my colleague can definitely add to that if I have missed anything. So I will not be able to say any specific point from your deliberations. But Mr. Sridhar Ishwar has talked about how FPO can play an intermediation role by having a proper synergy with MFIs and banking institutions. He also talked a very important point. He said that the financing FPOs is more of a relationship matter rather than a transaction matter. So probably it's very important. You see, if you go by the transaction methodology, probably none of the FPOs will be eligible for getting a loan. But then keeping that relationship is going to be it's going to be going forward. It will bring a better institution. So that is what we should look at. Mr. Krishnamurthy has talked about how they function on a sustainable model, how that threefold model works in their scheme of things. Then he's also talked about how FPOs are partnering with banks as BCs, and the credit assessment tool which they have developed as far as FPO is concerned. Mr. Rajesh talked about how banks are been supporting, especially SBI, and which has been vouched by one of our participants here also, how they have been supportive to the MFIs. And also regarding FPO, he's talked about, that is a very important point. See, just bringing the farmers alone is not sufficient. You should look at bringing some value addition to the produce. Then only the farmers will be really getting benefited. So processing and value addition is something which we need to look at when you are looking at the FPO. And financing the entire value chain is also one of the need for the sector of the FPO program. Mahesh again in this panel, he talked about how NABAARD is supporting MFIs, and he talked about various norms as far as NABAARD is concerned regarding refinance is concerned. He also talked about how FPO, if it is already from the existing SHGs, if FPOs can be created, that will make things much more easier and stronger because already a credit culture is there, cohesion is there within the members, and also that was supported by our friend from Samanidhi, Mr. Aisharan. Finally, there was a suggestion that probably we should look at, Anil only made that suggestion, we should look at making a representation to the Election Commission and other authorities that the environment in the country, the credit environment in the country, whether it is microcredit or other credit, should not be vitiated by making some false promises by certain elements, which has been affecting the sector. We know that from the beginning, if you say from 2007, 2008 onwards, if you see, there have been localized issues, whether it is in Krishna district, whether it is in Kolar, whether it is in Amravati, whether it is in Satna. You find so many places such kind of issues taking up at different point of time. Now recently I found one in Hoshiarpur also. When I went to Punjab, we were told that Hoshiarpur there is somebody like this, Mr. Bhatt in the Dakshin Kannada. And Dakshin Kannada, there is also brewing some trouble for the people on the sector. So ultimately, yes, it's a very, very vulnerable segment. It's a vulnerable sector. It's quite sensitive to the external events and external actions. So we need to protect it, and we need to keep this always in mind that there can be any such elements acting against us and vitiating the. So that is something which we need to keep always at. So with this, I conclude here. I thank once again everyone. And what we propose to do is that we will be documenting the deliberations happened here. We will be also sending the deliberations. Of course, NABAARD is the supporter. We will be submitting to NABAARD. We will also be sending the reports to the other the authorities of which matters, including government, Reserve Bank of India. And we'll see that these kind of deliberations will take place at different points of time and different places. As I said, we are also in talk with some other regional office of NABAARD. We would be doing some more such conclaves in other states. And I'm really enthused by the way the things have happened here and the way deliberations have happened in this conclave. So we would definitely be going ahead with this. Once again, I thank everyone. I thank once again NABAARD for supporting this, and I thank AKMI for the wonderful support they gave and made all the arrangements. In fact, they have done all the running around and making all these arrangements, meeting people, inviting them, all those things have happened. My colleagues, both Karthik as well as Saibal, they also toiled hard for making this program successful. Thank everyone for this event, and hope to see you all very soon. Please join us for the lunch. Lunch is ready. Okay, thank you. Oh, I'm sorry. Please set this up. No, please. No. So please come. Thank you so much, and we'll hope to see the sector grows very strongly and robustly. Thank you.
You don't go. Mr. Hegde, if you can come here. Mr. Hegde and AKMI has been extremely kind to us to be partnering with us and helping us to do this one. We would like to present a token of. Request Mr. Hegde to conclude this event with your vote of thanks. Thank you very much. Over to you.
Don't worry, I'll take only 1 or 2 minutes. Seeing the book in my hand, please. Good afternoon to everybody. It has been a wonderful session since morning. It has been a pleasure for all of us. Session started with the inauguration. Mr. Sriram, Professor Sriram, with his unique style, conducted the sessions very beautifully. I thank Mr. Sriram on behalf of Sa-Dhan, AKMI and NABAARD, and on behalf of all of you. I sincerely thank Mr. Sriram and their panelists. Panel members included Mr. Sridhar from Jana, Sudhir from Jana, Devan Sahu, Canara Bank, GM, Mahesh, Mr. Mahesh from NABAARD, GM sir, Mr. Biswas from RBI. I sincerely thank all of them. Then Mr. Karthik made a beautiful presentation on Karnataka position. I sincerely thank Mr. Karthik. Second panel started with our stalwart Mr. Salimatji. The panels were Anand Raoji, Mr. Gadiapnawar, Mr. Naveen, Divakar Hegdeji, Mr. Kishore Fincare. I sincerely thank all of them. Then the third panel discussion with Dr. Saibal Palji, beautifully conducted. And there is Mr. Anil Kumar from SKDRDP, Mr. Krishnamurthy from Ruti, Mr. Rajesh from SBI, Mr. Mahesh from NABAARD. I thank each one of them sincerely. So, on behalf of AKMI, I sincerely thank Sa-Dhan and NABAARD for, especially Mr. Memanji, who has conceived the idea of having a financial inclusion conclave in Karnataka. That has been a very insightful and informative. I thank Sa-Dhan team, Mr. Palji and Karthik also. NABAARD for supporting the event. Once again, I thank everyone. And if I will be failing in my duty if I don't thank all of you who has actively participated, spared your day. I think whole day was very useful. Thank you very much. A small announcement I would like to make. On 20th, day of tomorrow, we have an HR program. I request seniors to depute their HR people. Thank you, sir. Lunch is, yeah, please complete the lunch and go. Have a lunch. Thank you.